short narrative, right? That's the paraphrase version of what they're doing. They're using the bonds as collateral, right? And for the fact that if they got a steady supply of bonds that they can obviously monitor or track, or they can be in perspective where they can buy them, at any given moment, which obviously suppresses the value of the dollar and keeps equities, obviously equity markets greased and just running and pumping. Well, that's the secret of the Fed, right? That's their way of saying, okay, we got markets calm, we're killing the volatility, right? The VIX, we got things on autopilot, right? But see, problems with that is that, like, when you try to cage an animal at some point, either if you don't subdue that animal to the point where you break them, at some point the animal going what? It's going, it's going to find a way to break up out of it, right? Well, that's what the bonds are trying to do right now through the value of interest rates, right? Because interest rates want to rise because it is trying to read in all this inflation that's starting to happen, that we're basically at the cusp of stagflation. And every time that starts to happen, the Fed comes in and try to what? Buy a ton of bonds. Or they'll have to provide the liquidity for their henchmen to do it, right? We know who their henchmen are, right? BlackRock, JP Morgan, right? Citi, some of those guys, right? They are on the payroll, quote unquote. I say payroll, meaning they have access as counterparties to be able to deliver some of those, asset purchases on the backside through their reverse repo operations, cash infusion that they're getting, right? And like I said, we spoke about reverse repo operation before, nothing new, but a lot of that kind of gets lost, in the sauce because there's so many other things going on, right? And it's like people are not really seeing exactly the extent of why markets are still feeling like they're confident. They're overly confident right now, right? They're overconfident, right? So that's the difference, right? Therein lies the difference, because that's still $1.4 trillion, right? $1.4 trillion, right? That's a lot of money, right? We talking about this little 120 billion. That's a lot too, because that's the direct value of bond buying. The other one is being shadowed, though. That's the difference, right? That's the difference, right? So in that moment, these guys are turning around and buying assets, ETFs, things of that nature, and it's still adding liquidity to the market in a way where, if the buy the dip crowd is there, they're going to keep buying, right? So that's a problem, right? Until that begins to kind of, wind down or whatever, then we are still in a very liquid market. Overbought, extended, euphoria, irrational exuberance, you name it. That's the market. That's why crypto is supposed to already have backed off and gone back down at least 37,000 and, reconsolidated down there and then start to think about going back up. The fact that it chose to hang around 40,000 was for the same reason that the 10-year yield kept trying to stay at around 1.5 and 1.6 at a point when it backed off that 1.7 to say, well, you know what? This inflation starting to happen. This dilution of money that's coming from the money printer is causing more of a bigger problem than necessary. So we need to start pricing in a hedge against this stuff that it's going to implode on itself, or they're gonna have to stop at some point, because again, people are gonna complain that they're paying higher at the pump, they're paying higher at the grocery store, they're buying more house for less house, even though we're in a low interest rate environment, right? So that's the gift and the curse. You get borrow money at a cheaper rate, you can buy a house at a low interest rate, but now inflation then mess that hustle up because the price of wood and lumber then going up, steel, nails and stuff is going up. You got to pay more for the material now than the benefit of getting off the 2% interest. This is the hustle, right? So they've made it bad. So you had to do it at a certain time when it was just the right perfect time, and that time is gone, right? So therein lies where far as the investor or the trader has to start be very conscious of their portfolio, where they're leveraged at, where they're not, where's opportunity still out in the markets where you can benefit from it, where it's not, because we always measure it by what? Growth versus what? Value. And then, the last one being obviously what? This momentum, crazy all of a sudden, right? And they rotate between the two, obviously growth and value, but then every now and then they rotate into what? The momentum plays. Make sense? So this is how you have to start to look at the markets like, okay, well, yeah, they finna wind down some of this balance sheet a little bit. Well, not the balance sheet, but just the tapering aspect of things. But markets are still liquid in certain aspects because they're trying to hedge against, the weak side of the market, right? The weaker side. All right. But algos, again, algos ain't, algos don't care about, who you are, where you are, right? They're just trying to attack whatever side that they're being programmed to. They're going to go at the most expensive one or the highest PE value one, price to earning ones that are, have the exorbitant, future forward price to earnings ratio, and they'll attack those first, meaning bring them down, right? So that's what we're dealing with now. So just jumping kind of right into a little bit on GP. So of course, crypto broke out, it held around that 50, 58, 59, 60,000. And it began to gain footing at that point. Again, this is after when I went back down to 40,000, got back up there. And people are like, okay, that's your dead cat bounce. It should start trending back down now, right? Wrong, right? The bull case began to be, and this is sort of intended to what we're talking about false equity stocks, but I know Sister Erica asked about that too, false crypto. But just putting it, tying that knot together, so to speak, to give you an understanding why crypto was like, okay, well, all right, with stocks and y'all, we know that y'all are frothy market, hold our beer, right? We finna still, keep our momentum and trend intact. We're not just gonna kind of pull back for the sake of, making equity markets look right? That's the whole issue now, where I think the divergence is starting to happen. And that's good because at some point, it was just like too much that they were trying to make like the equity markets, and Bitcoin was that, they were against the gold market, right? The commodity market, right? But we know that's not true, right? We know that's not true because crypto was literally, made in its essence to be a hedge against the centralized, banking system of the world, essentially, right? So of course, that's the SP 500 and then some, right? To put it in layman terms. So just jumping right out there really quick here. Again, just looking at Bitcoin really quick, and we're going to kind of move around a little bit, but it's all going to make sense. So EVERGRANDE whole issue with China defaulting on the bonds. Okay, granted, they already kind of messed up their ability for a lot of their, because they got this whole kind of soft, ban on crypto. Only the miners are able to kind of still operate to a degree, and they got to be under heavy scrutiny. So they removed that China market a while back. So majority of this move in Bitcoin, I would say at least going back around the summer or spring of this year, that was all American markets, void of the Asian market completely been, because I think the last of that value of it with, the president over there was like, it's a no-go, right? Don't do it, right? Right? We're not going to allow it. Well, this latest one was obviously American markets in Europe and, Africa and people like that, right? They bought this dip here, right? This 30,000 dip, right? So that means the Asian investor not really in the crypto space like that. Outside of Japan, right? And Korea, right? But China, right? China was a big market, obviously, right? Obviously, right? So this is a whole different paradigm, right? Because they can't control or affect American markets by feeling, some kind of way to say, okay, we're going to dump ours to affect the American market to kind of get back at them in a spiteful way. So the hedge is now starting to live up to the hype. Now, does it still have the propensity to pull back? Obviously it can. Because right now, it still looks like more on you back it out chart a little bit here. What does it look like to you? What does this pattern look like to you when you back the chart out on this bigger time frame? It looks like a big old what? Anybody see that pattern there? What does that look like to you?
Sine wave.
What's in the sine wave, but if you look at it from that perspective, because you got the sine, you definitely got the sine wave going, right? Now, even if you do the other short one there, right? But I'll just make it big, right? Make a big one, right? But okay, granted. Now, even at the moment of that value of the sine wave too, if you just say that, okay, well, it might, if here was the crest of the sine wave, at some point you start to kind of what? Back off of it, right? You would think, right? At that point, makes sense? Mm-hmm. You with me? But when you look at it just from a bigger picture, it still looks like a big old what? What do y'all see here? I'm pretty sure I ain't caught that yet. Say again? Big old cut, right? Or it's either going to be a cut or it's going to be what? Look at the top. Look at the top. Look at the tippy top of all this stuff. Say again?
You mean like a double top?
You're finna say it. Follow your heart, right? Follow your first mind. Follow that knowledge. right? Or a double top, right? It could be a
Yep.
triple top, but y'all get it on the bigger picture. On macro, it's gonna look like a double top, right? So either we have a double top, or we got a what?
Or a cup
and cup and handle, right? I'm gonna put that up on the screen. Y'all with me? Everybody follow me?
Yep.
Now, obviously, one of them denotes bearish, and one of them denotes what? A bullish stance, right? So, granted, at the point again where we did not have that pullback, after we kind of came up, hit that point, well, the first 66,000, whatever, right? Got up there, pulled back. We came down and hit that 30, right? 30,000, 28,000, whatever. It came back up and got as high as 52,000. That became to be the resistance. People are like, okay, that's the point where we're finna lose it, right? Because they failed to at least, commit to taking out all that previous sell-off, right? To get back towards 60,000 or close to that 57,000. And so that should let us know that we have a weaker we had a weaker push. But again, the American investor and the European, whomever, showed themselves to be resilient. It came down, broke trend, broke the midline means, right? The mean reversion, whatever you want to call it. Came down right to that 20-day moving average on the daily. Broke below it several times, wicked out below it, but it held at the bottom of that linear regression band you see here. So that was somebody that was, and this was right, you see the date down here. This is right on the back end of September going into October. A lot of that was also spurred by what we got out of the Jackson Hole with the Fed when they were saying that it was going to think about tapering finally. Inflation began to be more of an ugly readout in terms of American markets, in terms of, they overly diluted, right? right? Meaning the cash value. And so again, if we're going to say crypto is a natural hedge against all that, then it had to have some kind of value where people say, okay, well, if that's the case, at some point the markets are going to pull back because we just exorbitantly, just richly overbought whatever, and it's just we're kind of dealing with a lunacy kind of aspect. The market, there's no organic value here anymore. Fundamentals are not respected. Then yeah, I want to be in something that's a hedge against that, right? And people are still reluctant to be in gold because gold has a very low it has a big ATR sometimes throughout the day, depends on news, but on average, it's still a very base case beta asset, right? It doesn't give you a whole lot of volatility, right? Even though it can have some bad days. So they will say, well, I'd rather be in something that has an adaptive story that has a lot of growth behind it. Why? Because the use cases in terms of crypto is still yet to be kind of mainstream adopted, regardless if we were getting this, the Bitcoin futures and all that. It still is at its, adolescent stage in terms of, banks really starting to use it, right? They want the blockchain, but they don't want to deal with the assets. Why? Because it takes away their luster from using the USD dollar and their manipulation power that they can do through Forex markets and currencies. This separates that. They can't do that with crypto. They have no control over it. Now they can affect it by putting their real money in the game and going that route, but they can't do it through controlling the markets, right? Through market makers that work in their, in their aspect of skewed items. Does that make sense a little bit? They can't manipulate like they do like a Forex pair, right? They cannot. They can manipulate gold, they can manipulate all these Forex pairs, but they cannot do that with crypto. Why? Because it's a universal code that they got to deal with people down in Brazil. They got to deal with people in Africa and Europe and the Middle East. See, they can't, it's not worth that gamble for them. They're not willing to take that kind of risk, right? And that's the difference. So American investors bought that dip. They bought that dip. A lot of American investors, and I'm saying that because others too, but they bought that dip down here basically. They bought that dip right there. And since then, boom, we came all the way back to the top. We eclipsed it. We broke out and made a new high. Now the onus is on the bulls to stay within at least, and I'm going to draw this here, because y'all know, let me clear off all the other stuff here, right? Because now we're playing a game of respecting that 200-day moving average, right? Because that's it, right? It has trended up. It is in that, like we said, that sine wave, like one of y'all said, that's in that sine wave stance now, right? And it's stretching out, right? And we're making a higher lows. Therefore, our uptrend is still intact.
Yep.
Y'all with me there?
Yep.
Everybody with me? Anybody got any questions so far? Anything? Anybody? Uptrend is still intact, right? Because of the higher lows. Until that, fades and when, whatever. And this is weird because we can come all the way back down to this area here, right? If we don't break that, it still be, in a bullish stance. And that's sitting rough around 50,000, 48 to 50,000. That's still in essence to coming off this point. That's still a new higher low, because you could say all this right here, as you see over here, was that of just the blow off top, which made it go to new highs, right? We came by and established a new low right here. Let me back the chart up so y'all can see what I'm saying. All right, come on, thing, get up there. All right, see right here. If I bring it up so you can see clearly, right? This is the new higher low from here off this massive breakout, right? Now you're in a stance where you can come down at base case 30, right, and test it again. That would be, that'll be a true back testing. But it's trying to build that new base case at around around 40 to 50,000, right? Because y'all know Bitcoin base is moving $10,000 lots, right? That's just what it is. When I say that, meaning it has channels that it play in within about a $10,000 span. Does that make sense? Y'all with me there? If you follow it, right? Because here was it was 30 up to 40,000, right? See right here? Let me draw it perfectly. See, that was about 30,000 to 40,000 right there. See right there? See what it did when it got up above that and stretched out and got exhausted? It came right back down to the top of that resistance there, right? That old resistance here now became new support, right? So here's support. Over here it was resistance. Make sense?
Yep.
So in the short-term interim, this is your new higher low.
Higher low.
You see what I'm saying? So the chart is respecting the value of that now, as of now. So even if it came all the way back down and tested that again, if it bounced there at 40,000, 41,000, whatever, and stayed to hover there, that still be in the scenario where the Bitcoin thesis will still be intact for us to the breakout to go higher, right? Because you're now playing within that again, $10,000 scenario, that lot. So here the 40,000, the next one is 50, right? So we'll say right around here, right? That's that next circle, right? See right there, what do you see right there? The peak at around that 50,000 area, right? A little bit over 52,000, but we say 10,000 lots, right? That's what we're working with here, right? 10,000, right? That's a bad 10, right? So 10, there's another 10, all right, right here. See right here? See all that resistance right there? Against that, that's why I kind of got there and it tapered out. It's like, okay, exhausted. Came back tested it here. That's your back test. Came up here again. It got right at around that area. Then you had this big blow off candle here. Look at the volume down here. Look at the squeeze momentum. See right here, the volume, the green was more green than red there. That was that push, that exorbitant push to say, okay, again, equity markets, hold my beer. Why? Because inflation is kicking y'all in the teeth right now. And y'all cannot, account for these high stock prices and valuations and PEs, forward PEs. And you got, massive problems on the fundamental side of things. Massive problems that they keep trying to write off as no big deals, blah, 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 blah. It's just because everybody else is scared to invest in anything else because the economy is not where it needs to be, no matter what they say it is, right? It's the only game in town. We call it TINA, right? When we say TINA, that means what? Stock. When you invest in stock market, they're under the TINA thesis, right? I'll say it again. TINA, right? It's an acronym actually, TINA. When we say TINA, we're saying what? I don't know if y'all remember that or not.
I don't remember.
Right? It's the acronym they use in markets, right? That basically means there is no other alternative. There you go. That's market jargon there. See, y'all get that word. I'm gonna remind y'all, right? Remind you.
Other alternative.
There is no other alternative. Why? Because at the end of the day, real estate market going through right now. Epic problems, right? See what I'm saying? Because of Zillow and all that stuff. What else is out there? Is the labor force back to 100%? Apparently not. What else is out there? That's why I'm asking. You got to be in a niche or niche business that can still survive, and deal with all the stuff that we're dealing right now, right? But that niche market is not big enough. It's gonna be big enough to float the economy. Make sense? So at the end of the day, more people are still more gainfully employed through the asset ownership in stocks. That's why the market can't come down and correct naturally, because the only people probably the market up right now in equity is who? Remember, I asked y'all that question maybe about 2-3 weeks ago. I asked Ilva, Camille, and a few of you. I was like, who's buying the market right now? institutional retail. And today y'all would say who? Asking y'all again, right? Asking for a friend. You say who?
That's just so you said it was the retailers.
Right. So there you go. So she's been listening, right? She been right.
I thought I'd be asleep.
Right. Retail. A lot of this market volume of late into equity markets have been retail. Retail
You
and
do be
algos.
sleep. You do be sleep.
As you be sleeping on the job, eh? Right. Retail and algos are the ones buying the market right now. Who else would have this kind of level of nutty euphoria to go against all this fundamental data point to say, you know what, that's still about a dip moment? That's retail. They call them dumb money for a reason.
They spend all money on the market.
Right, because they ain't got nothing else. Again, it goes back to this word, Tina. There is no alternative. They ain't finna be run out to get out in the world. No, forget all this COVID, PR, all this stuff. People don't want to deal with that because inflation is still kicking them in the teeth, right? Because you got to get a job that's going to be comparable to you having to pay the gas, this high gas to get there. The lunch you got to pay that's more expensive. People are sitting there thinking about this stuff now. And the feds, again, I've said this many times, y'all know this too. They have exacerbated the situation even more. And they refuse to take this L. They're doubling down on their dumbness. Why? Because at the end of the day, it's still going to benefit who? Asset owners. At the end of the day, people, again, don't get mad when they're making money. I keep saying that. People don't complain, so I'm making too much money. This is just too much on me right now. I just can't deal with it. Fire the Fed. He's just doing too much. Find me somebody that done that. And if that person did it, it's because they already made enough money where they can just, jump ship and just throw, cold water on everybody because they, bank account swollen, basically. Yeah, but it's not genuine because they didn't sign a loan when it was a problem before it got to the point where it's at. You see what I'm saying? So you get that now. You got certain banks coming out, against the Fed now, but they were right along with the Fed when it was all go time. Like people like BlackRock CEO, they would come out complaining. JP Morgan, they complaining. Like, y'all stop. And they still participate in the reverse repo operation counterparties every day, because they want that liquidity, right? Because banks are still not back to their 1,000% form of hustling, right? So again, I'm tying it together. So I'm gonna use a crypto and an equity scenario here to make this case, this case study come alive, right? Because down here, y'all know this indicator down here at the very bottom, that is the what? That is the what? The SP 500 correlation, indicator down here. So you see Bitcoin doing this, and you see the SP 500 just kind of up and to the right. Slowly methodical 45-degree angle. I mean, you couldn't make this stuff up. That's something out of this is something out of I don't know, a movie or something. This is just unbelievable. I mean, that's perfect. If anybody can get a market that does that consistently, who wouldn't want to invest in that? Seriously. Think about that. Now that's some many values of percentage gains there too. In that level of smooth up and to the right movement there. If a business could run their business and have that kind of level of performance year over year, man, look, right? They'll be listed all over the world, right? So this is what we're dealing with. Now, Bitcoin obviously looks like this, right? You see what Bitcoin look like. We up, we down, we're trying to march, but we marching in a way where, the trend value of what we learn in terms of technical analysis, when we look at a chart, whether you're a novice or you're an intermediary person or you're a pro, performance growth, what it looks like, right? Because we all learned this at some elementary levels in life where you looked at a bar chart or pie chart or stuff. And bar charts, definitely, if it's line chart, anything that starts off at the lower left-hand corner of a chart and goes up and to the right, that's a level of what? Some kind of form of value of performance, right? Right? Be it good or bad, but it's still a value of performance, right? So this is what this thing is showing you. It's showing you that, in this case, Bitcoin and that of course, the equity markets themselves is reflecting that too. But the difference is, again, one of them is a natural hedge against what? That of all the froth that you get in equity markets, because of the fact that it is a decentralized mainframe, if you will, currency value that's dictated by the value of people's use case value for it, utilization of it, and how it makes some of their life aspects better for them, void of, again, a government stepping in, telling them how they cannot do this, or y'all know what I'm saying. I'm paraphrasing out here. But that's why this stuff is important to see this for what it is and not say, again, the divergence has already happened, in my opinion. That's just my opinion, even though it still looks somewhat similar, but there's a level of sentiment that's showing that the crypto space is starting to kind of now, prove itself to be divergent. Not only that, you can normally tell also by when the altcoins begin to break out a little bit too. Right now, either we're going to be at what you call at the peak point of all this in terms of the crypto run. We're kind of playing leapfrog. Equities do it, and then crypto come behind it, and they start to do it, and then equities do it again, then the crypto come behind and do it. Or you know what I'm saying? Y'all see it, right? That's how the equity market's been doing. Or one of them is going to start to fade eventually, and the other one's going to say, okay, well, we're going to do what we were designed to do, right? Which is one of them does have a mandate. Which one has a distinct mandate? Obviously, crypto, right?
Crypto,
right? Because crypto was formed for what? For the purpose of what?
alternative money. Mm-hmm.
Right. No, you're right. That's it. Come on, it come through. Trust yourself, right? It's an alternative form of money or currency, right? Alternative currency, right? That gives people what? Again, think about use case. We always talk about use case, right? If you don't have to always deal with all this stuff with dealing with money all the time, exchanges and all that, you got to go from one country to another. You got to change the money, go through all that. You got to worry about your money being devalued, or obviously that's the whole hustle with American money, right? Again, imagine $1 looks like what it looks like in Ghana, right? Right? Or what $1 looks like in Ethiopia compared to their dollar. Like seriously, like that $1 can buy you, man. Look, you can buy like a meal for maybe like 10 people in there and get your oil change, right? With a USD dollar. That's unfair, right? But these are natural resources that you're buying, right? Tangible resources worth their weight in gold. So that's the deal with you dealing when you're dealing with fiat. That's the ultimate hustle, because fiat is, I'm gonna say this, and this is gonna kind of ruffle some feathers, but that's fine, because again, I speak from a very economic perspective here. But fiat currency in its natural value is a form of supremacy currency, right? Obviously, right? This is supremacy currency. Let's be honest, right? Because in its value, go ahead, sis.
I say no money, no honey.
Right. Again, they buying tangible assets with paper money, and it's also destabilizing countries that have ability to grow literally overnight exorbitantly with their GDP growth, because they carry all the natural resources in their ground. They're being shortchanged because they're getting what? They're getting diluted, right? They're being diluted unfairly. Fair value, fair exchange, all this stuff, right? The whole issue that's surrounded around these quote unquote third world countries, Brazil, Africa, whatever. Right? These people giving away bushels and tons and metric tons of items, and they're getting, man, don't even make me cry right now. It's sad, right? But that's what everybody's dealing with, right? That's what you're dealing with. So again, the alternative currency value in terms of crypto, it somewhat evens that playing field. Does that make sense a little bit?
Oh yeah.
Because if you're controlling 60,000 in crypto in Africa, right? The notion of value is directed towards that of the mainframe in the blockchain or the ledger that says it's still notionally worth what? 60,000. It's not saying, okay, well, yeah, it's worth this, right? In your currency. You see what I'm saying? It's still saying no, 60,000, right? Because you can easily.
Crypto has one value. It doesn't fluctuate based on where you are. Regionally, based on your currency, is one value all over. So the 69 is 69, point blank, period.
Right. That's why it's tracked. Go ahead. You own it.
Come up like that, right?
Right. Now you own it. I love it. That's why it's tracked by the UTC clock as opposed to the what? National time clock, right? It's under the UTC clock that you see down at the bottom. Now, it's universal time clock, basically. Right. So that's the number universal. Now you can have different exchange that have different variants of that amount, right? Like if it's on the Bitfinex or it's on Coinbase or somewhere, we might difference of degrees in terms of the price, but it's gonna be right around that 64, 63, whatever. But again, I'm saying out to say that you can also transfer that money. You can move it towards whatever nation you're going to, you can cash out in their currency. You with me now? Does it make sense?
Yep.
So if I go to the Netherlands tomorrow, my Bitcoin, I cash out in the Netherlands money. If I go to, the turkey tomorrow, right? The lira, Turkish lira. I cash out in liras, right? Or if their currency is weak against the USD dollar, I cash out American dollars, right? I mean, I have more buying power over there. See what I'm saying?
So you get your mobile power with the euro or the
Right. See what I'm saying? That's the difference.
Bitcoin, you should be spending your crypto or exchanging your crypto versus exchanging the dollar.
You see how that work? See, this is the biggest problem with a lot of people that on the gold side, why they upset. Right? Because see, the gold market is fixed. It's spot value, it's spot price. What's going on, my fellow on the YouTube? I see you over here. Peace, power, profit, Eva, Tamika, Eva, Sharon in the building. Anybody might be listening, in on the backside. We got our annual training thing, or annual training, but our weekly training going on a day early. So happy to have y'all here. If y'all able to listen and tune in, we appreciate your view. And if you question you haven't, drop them in the chat. We'll see if we can get around to it on the back end. Right? But that's the difference, right? So gold has to be, they're under the same monetary system of what? Europe and what? Right? Europe, Rome, and basically America, right? And then, of course, it's under through, China and everybody else. Crypto is not. Crypto is not. Right? So that's what makes it dangerous. And that's why they can't stand it for like a lot of the central bankers. They can't stand it. Right? Because they can't manipulate it. They can't control it. They cannot affect your livelihood in terms of how they do with, throttling up prices to kind of stress American people for like they're doing right now, inflation. Basically, right now, what's happening right now through real inflation. Who's controlling your way of life? Your job? Nope. Right? Your lack of a job? Nope. Right? It's the government. They got you. They pencil whipping people through what? Dilution of fiat currency by way of the Fed, which obviously benefits who? People who own assets.
Yep.
And they're wealthy. Did y'all see the stat that recently came out? They said the top 1% controls at least 89% of all stock asset ownership right now. Let that marinate.
89%, yeah.
89%. The top 1% controls 89%. Wow. So convince me how you finna fight that working for Mr. Charlie sun up to sundown with no other means of income coming in, and you're on a fixed scenario, you're on a fixed this and that, and you have no value to throttle up your worth value based upon the government that's keeping you subdued based upon a whole lot of other, whatever. Before I even go and say that, but a lot of other issues where you can't even be, you know what I'm saying, do your thing. Convince me how you gonna survive.
Most people don't care, Oba. They don't care. They just, live, pay bills, and die. That's it. Die.
That's a bad regimen to fall underneath. Think about that, guys. That it's serious. It's that serious. See, the extent of their interest level is not meeting their level of literally what they really need to be planning for their real future. Because they just like everything gonna be taken care of. Why? Because they putting a lot of their trust in who? Right? They put a lot of their trust in this person right here. And for the sake of the broadcast, I'm gonna mess it up for a reason. Right?
Samuel.
Right? Right? True story. They got too much trust in Uncle Samuel. That's problematic. Seriously. Uncle Samuel right now got you paying what about 27% more for a used car vehicle right now?
Yep.
About 12% extra on what? On your little eggs that you buy at the grocery store right now? That's why you need to shop at Black Soul Farm. Shout out to Brother Dawu L. Right?
Yeah, kill it.
Right? Bacon over 8% or not more. So them numbers are just all over the place. That's what you're paying higher value for all that now. Okay? They're getting you. So you have to have other means of income producing strategies to help you what? Account for some of those little inflationary pockets, because you know that they're doing this on a test run. This is a test run. See, this is part where they said, well, you got the 10 for Kufi on, brother Africa boy. Watch out now. All right, now you finna get into the next conspiracy stuff. All right, the government ain't never lied to me. The government can never do wrong, right? Y'all, we know we had no conversations before. Oh my goodness. That was almost headache when I heard some of them brothers say that night. I was like, oh my, y'all kidding me. Man, the government wouldn't do that, man. No, they would never do that. I was like, whoa, bruh. Shots fired, but I'm just gonna keep that quiet. Y'all were there that night. That was there. That's all I'm gonna say. Right?
Yep.
Right. So that's troublesome because they're saying, despite everything that's going on, that's happening, it's literally in their face. You know, now you have to constantly make excuses for your lack and say that you're doing your part by what? Lacking purposely, by way of allowing the government to what? Do what they're doing in their project, right? In their case study, by seeing how much they can stress test you, right? They stress testing you, right? The banks go through a stress test procedure, and they also have ways to stress test what? The citizens. True story. Some people ain't gonna be able to recover from this. Some people definitely didn't recover from this.
Say it again.
How many small businesses went on there and came back?
Oh my God. Big businesses. I know small businesses, but then you start seeing the big businesses fold, you be like, oh.
That's even worse, right? That's kind of like a yield inversion. Think about this. That's like a yield inversion. How big money folding faster than that of what? Small money. See what I'm saying? That's a yield inversion moment in itself. That's a stress test. True story. Good point. So there lies the difference. So again, you have to realize that even though I said, yeah, Tina, there's no alternative, right? Well, that's why they piled all into what? Into assets. That's exactly why they piled into stocks. This is why. Because, of course, over the last, we're going to throw Trump scenario in there too, right? So basically from 2017 to 2021, right? Right? So we got that time span within that. The market has just been on a phenomenal tear. Now, in itself, despite of COVID, right? Let's do this real quick, right? Let's run over here 2 seconds, then we're gonna run back, right? Oh, come on, dang. Come on, dang. All right. So if you're looking at the SPY here, man, you couldn't make this stuff up, right? See this right here. Matter of fact, let's do the weekly because it's gonna be bunched all up, looking all over the place. Let's stretch it out a little bit. Let's condense it, I should say. Excuse me. All right. You couldn't make this stuff up. That thing like a straight line, wouldn't it? See, if I did like that, that don't even look natural, does it?
Hey, I know.
Now, last time I checked, a 45-degree angle supposed to be somewhat, and this is just me, and this right is probably gonna be natural. 45-degree angle will be somewhat like this right here.
I know.
Would y'all agree with that?
Yep.
Somewhere around that about 45 degrees, give or take, right? Plus minus, right? Plus minus, right? Yeah, don't y'all come for me, right? This is what? Linear.
A straight line, boy. That's tough.
Ultimate, look at it. Young. You know, kid me on Simon, the kid. Young. That's my call. Boy, these boomers ain't playing. These boomers are not playing. That's who control this joystick right now, playing the video game called the stock market. True story. Could make this stuff up. That's just a 2000. It's in a straight line like that. Now let me back it out. Now let's put some. I'll put some perspective on it. Right? Look at that there. Now you make it like that. It seems like it's in 45. You ain't, don't it? See the magic of manipulation.
Mm-hmm.
No, the market is undervalued. It's going into what? In a proper simulation to where it needs to be going. Even if we didn't have COVID, you know, we should still be right here, just kind of inching on her. See, what they fail to realize is that markets also have a macro. It has a macro formula that they have to still abide by too, right? There's boom and bust cycles for a reason, right? We talked about that a while back, boom and bust cycles. Now, if I would just ask y'all right now, just off the top, based with everything y'all know we dealing with right now in America, y'all see what's going on. And I hint, wink. Everything that's going on at the ports and all that kind of stuff and whatever. Are we in a boom cycle right now?
Bust.
No.
Right? Overrated say bust, right? Right? This is a general question. I'm seriously asking.
Yeah,
I want you guys' opinion.
On what end you looking at.
And that's why I make the conversation on a macro picture. We talking about a macro formula. So that means we talk about overall growth value in terms of America, GDP, expansion of all that. Are we in a boom cycle right now or different?
Boom, baby. Boom.
if everybody's getting, even though it's inflation, if everybody's getting funded for whatever project they're getting, it's going to be a boom because it creates other things. Not only does it create more situations for their workspace, but it creates more jobs. It creates more ideas for competition. It creates a bunch of different things.
You know what? That's a good point. But that's in a space where you can itemize that and actually put numbers to what? To paper, to contract, to what? End user, right? That's before you get the infrastructure bill in terms of what is, the work. But then you look at the labor force, what the labor force is going through right now. Labor force all around America going through strikes. There's boats out still out to sea that's been out there for what? Months now that can't even offload. Rail system in trouble. Intermodal truck drivers, they dang near on strike, about to walk off the job too in a lot of ways because they're being taxed more on the what? On the front end than the back end. That's a problem.
Yep.
See, therein lies the problem where that in itself reveals that we can't be this, the author, and you can't have it both ways, as they say, right? You can't say everything is well, and then everything that is being presented when the camera's on is showing that it's not, for the aspect of making the numbers seem plausible, why everybody should be able to sit and go through this stress test, because on the back end of it is going to be what? Daffodils and ice creams and pink unicorn. Well, guess what? This was not necessarily, again, let's say even if we pull COVID out of the picture from happening, right? We know COVID happened here, right? Again, at that point, in terms of the economy as a whole, right? We were roaring because of what? Trump saying we're going to build back, well, not build back, but make America great again. They already had started cutting a lot of checks that was still yet to be what? They were still yet to be absorbed. Why? Because the suppliers at that point, y'all remember the whole conversation, because tariff made a whole new different problem.
Mhm.
These CEOs went out and started buying up all this material and he finna build America, blah, 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 blah. And then Trump did what? Kicked them in the the planners. Kicked them in the planners and hit them with tariffs. Started a Cold War with China. Now people that's sitting on all that supply can't do nothing because China really controls a lot of what? The commodity market.
Mhm.
They own a lot of the commodity market and they buying more. Right? And these people sat on all that stuff, and then they began to have a problem now because they can't move it. They can't, produce at the level that they feel like, we're going to have a boom cycle. Or we're going to get it now because Trump, they're going to build back. And then again, I said, like y'all live around the country all in different various places. Again, the Rust Belt is still rusty. I-75 is still rusty, right?
Yeah.
95, even over to mid Pennsylvania, up into Pittsburgh, is still rusty up there. Certain part of New Jersey, New York, rusty still. So where was all this build back, or I keep saying that, but I'm trying to make both of them, make America great again stuff at. There's places out west right now. Matter of fact, you out there out west, Sonny. There's places out there from Nevada, Colorado, all the way back towards California, where there's natural groundwater aquifers are drying up. The Hoover Dam is losing water levels, staggeringly. So the value of innovation in that's causing the price of goods and things to go up too, because you have a shortage of things. What I'm saying is that regard, you're supposed to be innovating to be able to compensate for that, to make sure that you don't stress your supply out. That stuff is not happening at a point. That typically happens in a boom cycle where you get on, you get about your business, you go grind it out and fix that which you're supposed to get fixed. But that's not the case anymore. I think a lot of that has been watered down for the fact that a lot of these people right now is in that what they call dog eat dog world. They're in what they call a greed. That's how I would say, right? They're in a greed cycle right now. That's my opinion. Of course, this is my opinion. This is all strictly speculative. I think they're in a greed cycle than they are more so in that of a boom cycle. Yep. They're trying to get all they can right now and skate out before the proverbial mess hit the fan. So because I say, look around you. Oh, go ahead, sis.
I said, so they can still be secured.
Right.
We just still looking for the next handout. And they over here taking their handouts and capitalizing so they can be comfortable.
and no end in sight. And the Fed came along and what made it even more so certain that they was going to it can continue that greed cycle. Biggest American heist ever in American history. Biggest heist ever. Because again, I keep saying that Flint, Michigan just happened a few years ago.
Yep.
That was under Obama. This is a first world country that got that kind of level of water problem. Are you kidding me? These kids are affected for the rest of their lives in American city, a city.
Yep.
You don't have that kind of level of inefficiency in a boom cycle because your innovation value and the ethics behind that will say, no, we got to fix that ASAP. We shouldn't even have to even politic about that. They actually start politicking about that, whether they should do something or not, and then who they're going to lay blame on it to. You see how that works? They're not worried about the quality of life of the actual individual citizen. That's not the case because, again, to them, they feel like at the end of the day, you have to hold your own so-and-so. Right? Tyreek style, hold your own, And so that goes back to our conversation, right? If they don't have what? I'm going to call it AO. That's going to be acronym. We're going to know what that means when we see it. AO. If they don't have AO, that means they don't have what?
AO.
Acronym. Go ahead. Somebody say something. AO. If they don't have what? They're up the creek without a paddle. They have what?
Aced out.
Right? The first letter is A. First word is A. The second word starts with O. They have to
ownership.
Come through over, right? I know y'all gonna come through asset ownership. That's the name of the game.
That's the word I'm missing.
All right, AO. Get your AO together. What you mean get your AO together?
Yeah, I like that.
You see what I'm saying? Better get your AO together.
Say something to me, Chris.
Because that's the reality of things. And the majority of people out there, do they got their AO together?
Nope.
Did COVID not expose that?
Ooh, yes.
They were already talking about the average American didn't have no more than $1,000 in their bank account. Some people are saying less than that.
The best of the best, it exposed.
$1,000. The majority of people didn't have $1,000 in their savings account.
Forget the poor. The ones who you thought had it together
didn't have it. Fact. That's exactly where I'm going with this.
They was beating the low and moderate income because they had vehicles. So you like, well, the low and moderate income don't have transportation to get where they need to go. So who are y'all?
Right. And a lot of that was what? It was debt laden. They were just debt laden. They just had a whole lot of debt. So they had the exterior of they were living it up or doing it, living their best life. But they were being controlled by what?
Yeah, debt.
By debt. And so when if we were to liquidate any of these people, if they didn't have their real AO together, then a lot of that stuff was just trivial stuff, depreciating assets.
Yep.
When you do the whole balance, if they had more, depreciating assets than they had appreciating assets, then they wasn't really doing nothing. And that's what it caused the greed, and you magna cum laude this, and you frat Junebug, so and so, and you soror this, that, and all that stuff that look good, sound good when you look. You gotta have your AO together. This is again a grim reaper conversation for all of us because this is where we all trying to now, get to a place where we can have that level of what, balance, right? Because it's not, you have to, again, it's either asset ownership, right? And that also entails, entrepreneurial values too, because again, you own a business. That's a part of that, right?
Mm-hmm.
That's a liquid, that's the aquifer, right? I'm using these little terms like this for a reason, right? 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 That's a liquid aquifer, right? That thing has the ability to produce, right? Clean drinking water, right? Clean opportunities, right? As long as you stay, keep it right. So again, all this stuff, again, it comes back to my to the point of knowing the game, right? So yeah, there's right and wrong in everything we said. So Sonny right, he ain't wrong, he ain't always 100% right, but he was still what? Right. Monica ain't right, she ain't wrong, but she's still right. Because it wavers, is my point. You see what I'm saying? The information, it's going to waver depend on, in most cases, the individual perspective, because if you ain't hurting, it's hard to not you know, speak on your scenario. It's hard to, because you saying, okay, well, if you ain't, I'm saying it this way, if you ain't really feeling the temperature like that, you can't really make that assertion. You see what I'm saying? You can see it, you know, it's probably some mess going on out there, but it's hard to really take that level of assertion to your accountability. You with me a little bit? Like people on Capitol Hill, they cannot really assess what it's like to live, like what poor and moderate people, they'll never be able to, you know, really understand these people's plight. So they make all these blanket policies and statements to affect these people's lives, and they really don't go to these people like they're supposed to and really work really on their behalf. Why? Because people who have low income, they don't have what?
And no asset ownership.
Right? They don't have that, and they don't have an AO. Right? They don't have AO or a lobbyist.
Oh yeah, that's
True story. Every single day, some billionaire, mega hedge fund is knocking on the doors of these senators, these congressmen, every day. Every day they can. Yeah, I know you worry about your little district, but go on, switch sides. Come on, we got you. We got billions, honey. We got you. You want to get reelected? We got you. Every day, they coming at them. So ordinarily, again, it's hard for them to see the plight of the average person scenario because they're too busy doing what?
Mm-hmm.
You know, being paid off, right? Being cashing out. They're cashing out. Because again, to them, they are in a what? Greed cycle. These people still have access to the stock market and they writing policy to affect the economy and people's way of life. Make that make sense. Where else do you have a scenario like that? Where they get to dictate literally, you know, the value of policy that, and they can then participate, double dip into it. American people pay them a salary, and they have the ability for what? Have what?
Mm-hmm.
Phenomenal stock options. Because they kind of in the thick of those conversations, where they could. It's sad, but anyway, move on, brother. Let me keep it structured, right? But I'm saying it for a reason because for us, of course, we understand it now that we're in it, that it seems to be no brainer that we need to be, you know, engaging asset ownership through equity or producing, you know, a stakeholder scenario, stakeholding through these assets, whatever options and, you know, stocks, Forex, whatever crypto, any kind of value like that. Now we know that now. And then of course, you know, home ownership properly done, because sometimes it ain't good cycles to buy homes, right? Depends on interest rates and everything else, right? Commodities and this, that, and the third. And there's a moment when there is. So through all that, we have to be more educated on the scenario, right? And then like I always say, you have to remove your what? Your implicit biases, right? Because if you have implicit biases are problematic, right? Because data is always subject to change, right? Same way in science. That's why people get kill me with all that. They just run with it because at this point, the science, yeah, that's what it says today. Don't mean they can't change tomorrow. Calm down, little hero, right? You gotta let people be able to absorb value. Let, you know, time offers, you know, prove to be, you know, a value decipherment of things in a sense. You know, some things take time, right? But one thing that cannot wait is poverty, right? Or a lack of being able to food, clothes, and shelter your scenario. So again, in a case like that, asset ownership still, you know, it's a personal responsibility of self-preservation. You got to find ways to always be in a position where you can have access to opportunity, right? We talk about that a lot. So this is more on the principle side of why we do what we do, right? We're going to talk about the technical stuff, the mechanic, and then we kind of go into what they call a mind massage, so to speak, because again, a lot of times people are still fearful of the idea of letting their money go down range ahead of them, where they can't physically see it all the way from start to finish. That's a problem a lot of people deal with still today. Yet they want to get ahead in life though, right? They want to get ahead. But, you know, on this side, the investment side, it's like, oh boy, that's a hard pause. It's a hard pause sometimes for some of them. They can't see letting that $2 go down range, boy. $2. That goddamn boy, crypto. There's some crypto out there that trading at 10,000 a penny, boy. You crying about the little $2, man. That $2 though. Leave, you can go right to the corner bodega and get, a honey bun. And that honey bun costs everybody about $2 because of inflation. Boy. Oh boy. That's mentality. That's bad. That's bad business. So this is why we're trying to change that narrative. So yeah, equity markets, again, perspective matters, right? Again, crunch that chart down. That thing looks what? Like it's natural, right? 45-degree angle still puts it, at a hyper. That's why I love the 200 moving average for that reason. It's a year tracker of trading. That's what 200-day moving average is. Actually, it's a year tracker of trading in terms of even in moments where you have quote unquote solid aspects of your market, you still probably be tracking at or around its value. So even if we was to play that game right now, even though we know the markets are still highly extended for a lot of other reasons, obviously the Feds and whatever, that still puts us no more than $328 a share, even for the SP 500 right now. We're sitting at 463. And even at 328, it will still be somewhat questionable in terms of its, PE ratio. In terms of the broader market overall, we put the broader market into one big form, one big stock, what would be the PE be, and that's somewhat denoted by our GDP, right? Which is obviously still what? Crashing. What was the last GDP readout we just got last month? I don't know if y'all remember it, right? What was the last GDP readout we just got last month, guys? I'm stress testing y'all a little bit now with these little pop quizzes, right? Right? Anybody, y'all know if y'all remember, what was that last GDP? What was that readout? Anybody screen
It was
start
like
with
six.
a
It
T.
was like six something. Six.
No, the GDP, not you close, not the CPI, but the GDP. No, they ain't.
Oh.
But what was the GDP?
The last reader.
Yeah, the last readout the GDP. Let me see anybody on the backside got it. We got some family over here on the YouTube. What's going on, family on the YouTube? What was that readout?
Oh, you say what was
Start
it?
with the letter T. Start with the letter 2. What did we get on that last GDP readout? Blank percent. It was how much percent? It was start with a T. You know it's only gonna be what? 2 numbers start with a letter T, right? Come on through, man. Or 3 letters. Excuse me, 3 numbers. Let me see. Yeah. Yep. 3 numbers start with a letter T. Which ones are gonna be? Come on, smart people. Y'all cutting up tonight.
Bus.
What 3 numbers start with the letter T? Now I'm finna put y'all on the hot seat.
Oh,
The number what?
2, 3.
And
13.
I said start with the T. They well, they don't even know that still starting, but you know what I'm saying. But 10, right? So it's a 2, 3, and 10.
Yeah.
Right? So get what? It's either gonna be what? We either had a 2%, 3%, or a 10% GDP last month. What did we have?
Oh, last month. 2.
Yeah.
2%.
It was for the quarter. Well, we say last month, but it came out last month. But it was for that. We had a say it again.
2%.
A 2% GDP. Stop playing. Oh, and we had a 2% GDP, and we using the base case. What do you call it? Base effect, meaning we coming from the bottom up, right? Because they used COVID as the new low, right? That was the reset, right?
Yep.
Everything from the bottom always look bigger. Make sense? That's how they skew the data to make it seem like we coming back, we rolling back. See how the government get you? Got him. You think you just booming. You booming. You bunk. No, bro. You coming from the bottom. That's why it look bigger.
Coming from the bottom, no, you.
And we had about a 5 or 6% way back. What? Oh, no, about a 4 or 5% way back in the spring or the summer. How do we go from a 4 or 5% back then, and literally a quarter plus later, some months and weeks later, we all the way back down to what?
All that extra money.
2%, right? So how is that a boom cycle?
Yeah.
How we booming? How's our economy roaring back? Somebody make that make sense to me.
It was 6.7 the previous quarter. That's
Thank you.
Big rollback.
6.7% base case. In that perspective, that's a 4.7 differential in GDP growth. Please, somebody tell me what happened between then and now.
The all of that no more handout money. People spent it all. Back to reality.
Oh, wait.
Handouts
Is it
went
going
away.
by the bottom chart as far as the years from 2014 to 2019?
No, this within just this year alone. We just using the base case from even this year, from 21. But even if you go back to 2020 with the virus, but just in this year alone, from January, of course, the fiscal calendar starting in the first quarter, coming out of the fourth quarter, in the first quarter, to where we at today, we saw expansion of GDP rising back up, and now you had a massive contraction. You had a 4.7 negation in GDP coming from the last readout, the last quarter into this quarter. That was a horrible miss. That means if your GDP went from a 6.7 to 2%, we smart over here, right? When I say smart, meaning y'all know we research-minded people over here, right? Y'all know doggone well, we talking about gross domestic product and all that, what that encompasses. Job growth, producer power, margin value, meaning, you able to kind of, play a little bit on the international level and kind of, wield your power from that value because you the big dog. We contracted down to a 2% from a 6.7. And you going into a quote unquote holiday marketing blitz of the year where the money should be really flowing, which also what goes back to the economy and feed the economy, which also feeds what? GDP, right? Why you had that level of contraction then? Somebody make that make sense. See, this is where it gets scary because again, they got to find excuses every single time to how to make it make sense. But they know the average American is getting smarter. For those who take the time and want to learn things of this nature, they know you're getting smarter now. Because they know a lot of people out there are just like clueless. So they bank on the media, obviously, that goes after them is because those people sit around and watch that kind of stuff, right? They're just waiting to be told what they need to be told, as opposed to what they actually need to know.
Yep.
And while all along, asset owners, are ripping. Asset owners are ripping. Look, we sitting at a 68, and it just pulled back. It was at a 70 plus. This is on the weekly chart on the SP 500, right? You can see how many times on this thing where we got up towards that point on the RSI of just being completely just what? Irrational market behavior, just euphoria, right? Euphoria, those stints are just euphoria. You can see literally here on this chart what's going on here. This was the most revealing because it was a complete reset at the most horrible level because of COVID. But you gain all that back and then some in the stint that fast. So of course that's, you see what I'm saying? I'll just be honest. You can go back historically. I can pull the whole chart and go way back. I'm only saying that because again, at that point, they kind of knew at this point. This is the time where they get a chance to what?
Yeah, they came up like a fat rat.
Thank you.
Yeah, we were over here. It's funny now, but it's not funny because when you think back, when you look at the chart, when you look at the chart and you go back to that March 23rd, 17th, whatever time frame, 2020, and you look to see what it's done over maybe 6 months to a year, with the stocks, and I go back and I look all the time and I'm like, darn it, I'd have just paid attention a little bit. You could have really came out of your economic situation because you already knew what was getting ready to happen. You would have been right there.
See how this works?
Yes.
They already know. They already knew, and they were sitting there rubbing their hands together in the Birdman hand rub, shaking their hand like, we finna eat.
Pull their money out of retirement and reinvested it just to.
I know a few people that took one out their 401ks, not just for the fact that COVID alone, they did it for the value of the markets. Again, I don't even shouldn't be saying that, but I'm gonna say this on the record. I ain't saying no name, but a couple people hit me up, consult me, right? Hey, bro, yeah, I got this little bit here. What you think?
Yes.
I'm like, I can't give you financial advice, but look, this is the deal. All right. Again, like I always say this in passing to y'all because y'all know how we do. We roll over here. I say they do what? They dole out the what? The bullets and the what?
They sure did.
And the bandages.
And the bandages.
They dole out the bullets and the bandages. They got the what? The whole situation what? Covered.
Covered. They did
Cause
that.
and effect. They know this is a moment when they make money. Anytime you go back to historical market record context, anytime you have a chaotic moment in markets that obviously, where there's a major drawdown, you best believe the safety net is coming. And it gets ferocious and ferocious with every single time we have such a calamity. To the amount that it gets to the point where there comes a point where they start having what they call this impunity dialogue that surrounds markets. I mean, like Teflon done markets, like body dipping and markets will never go down. That's what you're starting to hear now, right?
Yeah.
See,
Even
that's bread. Go ahead.
Even I think we had looked at it one point. Even some of the schools got smart and invested some endowments, some of their money in the market. Some of the other people's schools, of course. Wow. Oh, you never mind. Go ahead. Let me put myself on mute.
No, you good. You good. See,
we have to really start. Mr. Ivy Stokes, I remember when I first met him, he said, y'all got to start seeing y'all money in more places than your pocket. Cash producing assets. Like you really can grow your portfolio, grow your network. If you once you start, when you talk about just income shifting, taking that extra dollar and putting it in something that could give you that return on investment. Like if people really just said and just paid attention. I just had a conversation with somebody today and I said, no, don't. If you're getting an extra 500 this week, don't even think about you getting 5. Think about you getting 4. Take that 100. Don't even worry about it. Just take the 100, put it in the market. I'm telling you, you would not be in that same position in a couple months and you would thank me. I'm telling you, sacrifice it. Don't even worry about it. If you got a bill, don't even worry about it because you'll be able to cover that bill and more in a couple months. Oh man, it's amazing. I appreciate
how interesting that is. See, it's one aspect, and I got to go there for 2 seconds, right? And this again, I'm doing this in the aspect of what they call economic edification here. Now it's going to seem like it's seen the personal for some, but it's not. But it's strictly dealing with preservation here. See, the aspect of blind faith that comes along with people believing that they're going to be taken care of by some kind of value of a, entity, government, or different, right? It kind of lessens they call the responsibility, right, of oneself to say, I need to do maybe a little bit more to help meet that scenario or help expedite that scenario, or I just can sit back and wait on it to take its course, or something happens, right? Some kind of value revelation, right?
Mm-hmm.
Then another aspect of that where you say, well, here's something that's backed by what? Some data points, right? Data points, and we do say data points on a blanket scale level. We know what some of those data points is, like technicals, fundamentals, sentiments, understanding the whole idea of literacy as a whole in terms of financial markets and how that works, the jargon, up and down, right?
Stash party.
Right? It's going down 8 o'clock. Y'all make sure y'all get that stash party real quick. Go log on, get your coins right now. Free money stash party, right? Got the heads up there, right? And then there's the other aspect of that same level of blind faith that deals surrounded around you, obviously having to what? Trust your what? Your money. That's a different blind faith. Because that comes with what? You're going to put forth some kind of effort of what? Method to wield that value of that money if you have the ability to. It's a different value of blind faith. Here you get to monitor it. You get to make executive decisions over it at any given moment. You don't have that level of power when you're waiting for something to reveal itself to you. You see what I'm saying? That's the difference. That's the difference. I'm not going to go deep, but I'm going to leave it at the point where I know you guys are definitely understanding what I'm talking about here, because you guys are definitely intelligent here. Y'all know exactly what I'm saying here. So you're trying to convince people who fell into, in my opinion, right? Oh, 1 second.
Drop that. This IPO today. Y'all better get in where y'all fit in.
All right, got that new Rivian stock, right? IPO today and they cut that check.
Cut that
Right.
check.
See? All right. So again, you're fighting that kind of battle. Where again, you've been conditioned from literally grade school to where we are today as adults, that the proper way to be able to, I guess, live in America. Notice I said live. I didn't say survive, thrive. I just said live in America is that you go out there and perform through the value of what, any kind of baseline, base case scenario of information you get for its education. And then you got to go out there and what kind of work your way, into the dream, right? It's not a whole lot of, it's not a whole lot of ammunition behind what? Ownership, right? Ownership. They don't teach a lot about that in school, right? Ownership. We say asset ownership for a reason, right? Because economics is an elective, right? We said that like a million times, right? It's an elective. How's learning how to be financially literate is an elective in America, where there's a cost of living is through the roof. It's the most richest nation on the planet. And you learning about the economy is an elective, right? Because they want you to be dependent upon the system to kind of guide you, whatever. But again, a lot of the autodidact value of what we need to be focusing on is a whole new different value of blind faith than waiting on, again, a higher power, i.e. government, or, the other. Y'all get what I'm saying. I'm keeping it, very, respectful as possible here in this respect, for any value, whether you're on either side of that. But you have to realize, like we just sitting there saying, like you just also alluded to as well, since Monica, within that, once you know better, you're supposed to do what?
Do better.
So that same $100 that you would have blew again at the club, at your favorite restaurant, right? Whatever. Now that $100 in use cases like these here seems a whole lot more valuable and viable than just blowing it on something that gives you what? A one-off return. Notice I said that? That's a new terminology. It gives you a one-off return. That means you get it for that moment. After that, it's over. That's the emotional high. That's the moment I was able to spend with my sisters and my homeboys. And, that's a one-off return. I'm going into that ROI knowing that I'm going to liquidate this for this moment. Does that make sense?
Yeah.
That's a one-off return. In order to have that at leisure to be able to afford that one-off return, you have to work extra hard to be able to what? Account for that you're finna lose through this one-off return to be able to what? Have that moment. Here, that whole thesis changes. You with me? It changes. Because this $100 over here has the ability to do what?
Yeah, to grow, to duplicate itself.
That's where I was finna go. Come through. It has the power of duplication. Some people say what? Multiplication. I like that too. Right? I like that too. Right? Long as we're not dividing and subtracting, right? Then we winning. Because that's what comes along with this one-off return. You finna divide and subtract. There's, the net positive, you got a chance to enjoy your moment, your friends, whatever. Okay, yeah, some things are just priceless. I get that. But if you're in a growth cycle in your life, you're trying to play catch up, right? In some kind of form of fashion, you need to be in a duplication, multiplication environment. Fertile soil. Money has to go out there and work for you in some kind of form of a blind faith. Y'all with me there?
Yep.
Because if not, you're going to have to go out there and what? Elbow grease your way through life.
Yes, sir.
Or you have to become the Fortune 500 CEO or something, or you got to what? One way or the other, you're going to have to use some muscle, right? Either going to be brain or it's going to be what? Back. Right? Brain or back? Which one? Choose wisely. Whatever song go back in the old school, 6 million ways to die, choose one. I forgot who sung that song, rap song back in the day. right?
And too many of us know that one, huh?
Right? 6 million ways to die. Choose one. Well, I'm of the mindset I want to go down using my brain. Now, you know, that I've acquired a little bit more knowledge here than my back. That's an aspect of knowledge. Knowledge. Know the ledge. Know the ledge. Knowledge. Knowing. And not just completely what? Belief that it's going to be okay. Because you can't will belief the way that you can will knowledge. I'm sorry. We have to be able to understand that. You can will knowledge, because why? Knowledge brings what? Power. It brings a form of power. You got power when you got some knowledge. Facts. Facts. You have limited power when you under the understanding or working under the auspice of belief. Limited power. So all this is relevant. Why? Because markets are, you know, as we like to say, what? Future potentiality, right?
Yep.
A predictor of future
Profitability.
Hello. Let's go. Because you see that now. You know that now. You got a historical rut, a tracker here in this chart to give you an understanding of what that growth has looked like or have not looked like. Looks very linear to me, right? Looks very linear to me. Look, okay, let me squeeze out some. Okay, it looks very linear to me. This was subprime lending crash, 2008, 2007, 2008, 2000, you know, we'll say 9, to linking into there too. And then everything from that point on went straight up. We thought COVID looked bad on this side of it, right? It's worse. It gets worse. So you stretch it out, see, it gets worse. You can't even put all that in. Look at that. Perspective. So it's all based on perspective. So again, saying all that to say this here, asset ownership still wins, because they're going to convince you that at some point the musical chairs are going to stop. Yeah, at some point, yeah, they're going to have to back down off the greed machine. Do you say, well, I got to exit the markets altogether at that point and go back to waiting on Mr. Charlie? Or do you understand the value of how this thing works and you start to realize the value of dollar cost averaging, principle-based investing, the same way you give to a church blindly every Sunday, expecting insert, you know, you understanding how you feel within that, whatever you feel like you're gonna get back in that moment.
On your
Here,
blessings.
some people say blessings, right? Some people, you know, in terms of whatever they use in that perspective, right? Here, you get a chance to see a true return or benefit or value to that sowing of a seed, and you get to monitor it. You get to learn about it. You get to see it for what it's worth. You have executive power over it. You buy in 1 second and sell it the next second, literally. That's the value of control. So while markets seem to be, under the guise of, pink unicorns and daffodils and nothing, the market do no wrong, even though everything around it is burning and going, it burning down because of the feds and this and all this data coming out. Again, tonight's topic is what? Like I said, all these things are things that we're talking about right now. Evergrande on the table. CPI came out today. CPI data was at what? What was the CPI data this morning? CPI data came in at how much today, red hot? It came in at how much?
I think like 6.2% or something.
6.2% CPI came in today. That's a net positive of 0.09 increase that they was not expecting. They was expecting like a 0.02, I believe, somewhere around there. It came at a 0.09, even hotter. That's a big difference. People are like, well, I don't understand the difference. CPI is what? Consumer Price Index. Again, that's stuff that you're feeling right now as a consumer. Eggs, milk, cheese, butter, biscuits. I mean, houses, wood, lumber, gas, whatever. All of it is what? Going up in price. You're getting a lot less for a lot more. But it was supposed to be transitory months ago. Why? Because at the point when we had GDP sitting at about a 6.7, right? Literally about a quarter plus ago. And now it's all the way down and dropped to 2%. Well, seems like GDP, the gross domestic product, seems like, we definitely ain't, America ain't back to work like they claimed it was supposed to be in this, that, and the third, and we was gonna be producing like this, that, and the third, like they were saying. Yet the only thing going up is what? The cost of all those goods and services that we would have loved to be paying for with all this new growth that we thought it was supposed to be getting in the country. But the one thing that we know that is still going up is what? Them stocks.
The stock market.
Stonks. Them stonk going up. Yeah. They ain't taking no days off. As I like to say, they ain't taking no days off. Even when you think you got a day off, it ain't even really a big day off. Market can't even pull back a whole 1% without fighting it and clawing it like, no, y'all ain't forget this. Nope. It ain't gonna be that easy. Now, even though we mapped the pullback out here recently, of course, it's honoring it now. You know, whatever, right? We technicians at this for a reason. We got all the way at the top of the integration band, not rocket science, obviously, right? When we see things get extended in terms of short-term duration, what do? We plan for what? Potential downside, because the risk on becomes more what? Exacerbated at that point. It's an exhaustion of buyers. There's less sellers, and at some point, the musical chairs obviously stops in short-term duration. We start planning for what? A nice equal, you know, when we say equal, meaning some aspect of what? Hedging against some of all that euphoria and the pullback. See, those lines there for a reason. Again, clearly. Can you see? Barely. I can see it. I see it. I see it, bro. Pullback. Not rocket science. So we politely got short up here around 470.50. We bought puts. Playing. See, this is the aspect of what we're saying. Learning how to strategize to get you what? You know, you income surfing here. We income surfing. I'm just making up terminology tonight, but y'all get the point. It's income surfing. That is, because you ride the wave when it's good and you ride that wave when it comes. Income surfing. Think about that. If somebody got to wait on Mr. Charlie at the end of the week to get that check cut alone, right? And that's just it. That's it. Mr. Charlie got too much power. It's, you know, we gave Mr. Charlie too much power. Time to, you know, take some of that power back. Right? So, you know, this is the part, this is the short term. This is the micro. This is me moving into the micro understanding of how this market works, because it's feeling some of that pressure, even though the sentiment is still of a bullish macro. Of course, like it feels like a boom cycle. Obviously, like I say, nobody's really wrong in this scenario. It definitely does, because the markets are shown to be Teflon done. A lot of the backwood data in terms of Main Street information is not equating to that of they're benefiting to. Of course, they're not. Main Street is hurting right now. And they're going into a holiday season with what? High inflation. And the margin value that these companies are going to get out of raising the prices on people, and they know people are already struggling, it's going to be staggering. Again, do you think these CEOs care about your situation? Or are they going to pass that cost on to you, the end user? Oh, it's inflation, though. We're going to, you know, eat the cost. You know, we're going to look out for our customers. And do you really think them CEOs out there thinking like that? Seriously?
Nope. They'll still buy. They'll find a way.
They'll find a way. They got you doing the Iraqi war. They're going to get you again right now with COVID. Because it's a wealth transfer. That's all they look at. Wealthy people say, this is the moment where I can, expeditiously run my income up or my wealth value up literally overnight. And they plan for this. They plan for this. They were saving that bacon. They were saving that bacon. Because they know when you got loan money, you can sit and wait people out. See, that's why it's so important for us to realize that now. We can't sit around and act like we good to go just because, we think that we really planning for tomorrow, right? We're being very cautious and scared and stingy in our own growth because we don't see that. We're gonna blow it on the one-off ROI moments, right? We're gonna blow it on one-off ROI moments, but we're afraid to say, let me take that. I was gonna blow this over here. I'm gonna put that over here. I'm gonna put that in the stash ETF, or if I could just get 3, 2, 3, 4, 5% a year, I'm still kicking butt, taking names. To convince people to be that patient with their money, that's something that's hard to get people to do. Some people. But again, they've yet to understand the power of what? Or not necessarily the power, but the importance of, again, what? AO. Asset ownership. Y'all with me?
Yes, sure.
Making sense?
It's too risky.
Yep.
It's too risky.
Yeah.
How much money can I make?
Right? Because they can't will it right in the moment. That's what's gotten, because again, it goes back. They got that blind faith. Boy, they got that blind faith, but they got the other blind faith. Y'all got that different blind faith. They got the other blind faith. Taking it over. It's a difference. You know what I'm saying? And it's no different. It's no slight. And just the reality of the thing. We live in a world that can care less about your what. I'm not saying it in a blanket statement. They care less about your beliefs. They care more about what you own, what you can control. See, that's what happened with power. Power don't care about all that, all the trivia stuff. They care about what you own and can control. Because in that moment, you get a chance to open your mouth and say something. That's how they look at it. You have the ability to
African Emporium. No, man, you ain't dripped out, man. You ain't dripped out like
my
us,
bad.
bro.
I ain't wearing no Beast Lagos and Giuseppe, what that kind of stuff called. I forgot the name of that stuff, man. God. Yeah, you're right. But what they called?
Balenciagos.
Balenciagos. I ain't got no Balenciagos. And some.
Where's your Lambo at? Where's your Lambo at?
Right, the Lambo out there in the
Maybach.
Right, they got the
talking about all this stock
right?
stuff, man. Where your money at African Emporium? You talking all this stock stuff, man.
Right.
I don't see you with no.
I don't see them bands on
man.
the desk. You got to like where them bands at, bro? Where them bands? I got to
Yeah, that's the new age ads, man. If you ain't got bands sitting on the desk, you ain't sitting in a foreign car. You know what I'm saying? You ain't making no money, man.
But know why? Y'all know why though, right? Of course y'all know why. But I gotta still phrase it like that, right? Because we got family listening in from different places. But y'all know why, right? Because they trying to do what? When they expecting that out of you, what are they really trying to do though? What are they really trying to do in terms of you? They trying to do what?
Distract.
Say again?
I said distract.
Well, they being distracted by it, but what are they really doing when they coming at you and looking at you, assessing your situation? They just know that you invest. They know that you serious about your scenario and your craft. You learning. They know all these things, right? But what are they really trying to do?
They trying to see what you're doing.
Right. And another way of saying that is what? They trying to do what?
Oh, seek the knowledge. Seek your information.
Well, probably, but hopefully they will want to. But sometimes they not really. You trying to get They trying to what? They trying to do something else. I'm going there for a reason. I'll pick it up. Like, let me see anybody in the back.
They trying to distract you from the truth.
That too. They definitely doing that. But what intent wise? What are they really trying to do? Y'all right on it too. Y'all sitting there dancing around that thing. Who y'all on it too though? Y'all right, but what are they really trying to do? I'm gonna do it in big letters.
Monetize?
Close. What are they really? Start with M. Start with M. Now you can see the screen. Start with M. What are they really trying to do? They trying to do what to you?
Mesmerize you.
Close.
Measure.
Come through. They trying to measure you.
Yeah.
We old school.
And
guys,
you know what? I was gonna say that earlier too.
Yeah. Come on,
people size you up and measure you and stuff like that.
Thank you. They sizing you up, man, for one or two reasons: either to take or to what? To berate you, right? One or the other. They either gonna take or berate. Think about that.
And drew a little bit of both sometimes.
Exactly. Everybody don't got the same intentions as you do
them,
when you're trying to be pure at heart and trying to really help people.
I was just getting ready to say that. Yep, you try to be pure hard. They over here.
Yeah, that's real talk.
They measuring you.
They measure you big time.
Because to them, that's the only way they can measure you by what? Trivial values. They caught up in trivial value because their aspect of blind faith to them is like, it's like, okay, it has to be something large in life, right? Because number one, it overtakes their lack in some cases. So that's the way to measure their level against other people, right? Or their sufficiency, because their self-esteem is attached to that. See, our self-esteem ain't attached to what we doing.
Nope.
See what I'm saying? It is not.
I say, man, watch out for people who be promoting through ads and, you know, talking all that good stuff to you. Beware, man. Beware. It ain't hard to reach us. That's all I'm gonna say about that. It ain't hard to reach us. You ain't got to call no 2 or 3 phone lines and go through 2 or 3 customer service representatives to get to us. You just message us directly or in our group.
Hey, do you guys ever get this? Not to cut anybody off, but do you guys ever get where you happen to be talking to somebody about stock? It could be a family friend, coworker, somebody on the street, right? And then the minute you start telling them about something about stock, they instantly start saying, well, my homeboy or my brother or my cousin blew up and did this or did that, or I got this and that. And they never want to like have a real discussion about it. It's just like, I blew up and that's it. And then you're like, oh, well, what stock? You know, what stock did you get? Oh, I put mine in mutual fund. Like, what? You know.
But that kind of goes within that point too. You're right. A lot of that is, again, people psychologically, again, they doing what? They're measuring.
Yeah, they measuring.
See, they don't understand how this stuff really works. How you're connected. See, now this is where it gets a little bit on the esoterical side of things, right? Right. I got to speak to that side of it because, again, this ain't the spooky side. It's just a side of you that makes you complete as a person, is the value that you can still willpower and be humble. Meaning you can brandish power and still be, you know, approachable and humble in your approach to being able to do it. Why? Because what makes that scenario superlative is why? Because you put in the time, right? And then, because y'all know one of our favorite mathematical equations is what? Time over what?
Money.
That's our t-shirt moment. Time over money, right? And in doing so, you gain what in that? All the things they talk about in the, you know, in the books out there, the different books out there, you gain what? Wisdom, what?
Wisdom,
knowledge, right? And what? Understanding. Come through. I'ma use what been used. Right? Say it again. All right, see, Joker finna cuff me now, boy. Look, I'm finna get my flag tonight. I'm gonna get me flag tonight. But I'm just speaking to y'all, what y'all inner nerd. Everybody has one. I don't care who you are on the planet. Everybody has an inner nerd.
Yep.
Meaning, I say that part of you that you know that's, you know, intellectually, you know, put together, and sometimes you don't get enough chance to brandish it because you're being overshadowed by, you know, this social stereotype, right? Everybody measuring you from, you know, from afar. It gets ugly out there. Again, this is a human frailty. We get it. Here again, we're using methodology, we're using research, data, we're using everything that we're taught, you know, or that we understand, especially as adults, in terms of a critical analysis, right? Keyword, what? Critical, right? A critical, when something is critical, that means it's what? It's severe, right? It's important, right? You taking your time to realize if it's critical. This is critical what we're doing. We're doing a critical analysis. Critical analysis is not what? At the slot table in Vegas. No. Slot table in Vegas is what? That's blind faith. Yeah. Make sense?
Yep.
And some of the other stuff that, again, not shots fired, but y'all know what I'm saying. The other aspect of that, in a lot of ways, is the same thing. You're giving it to an institution, and in regards to them doing what with it?
Blowing up.
So, y'all get my point, right?
That's
I'm
true,
speaking in
brother.
code, but I'm speaking direct. Y'all know exactly what I'm saying.
Increasing in value.
And see what I'm saying? And your increase is coming at the aspect that you still got to go out there and what? Work it. Work
Yeah.
hard and wait. You got to work and wait. We're using critical analysis here. That's the difference. Essentially, you can say, oh, critical analysis thinking, right? However you want to put it, critical thinking, right? It's still critical. This is what we just said. It's the same reason why Sister One, you know that now, right? You can tell us about that. No, look, I just saw this happen. Ain't no in the world from the miss something like this again. So anytime I have any kind of understanding that there's going to be some kind of problems, right? Physically, whatever, money, whatever. I'm not playing the game. Let something happen in the market and crash. Again, these people been sitting around waiting for years for something to happen in the form of a quote unquote crash, because they know what's coming. Right after? What's coming right after something that's so-called quote unquote crash in the market?
Bail them out.
Bail them out. Bail them out. Who sang that song? And I might be saying it wrong. What it called? What that song called?
Yeah.
Bring them out. Bring them out. Bring them out. I'm saying bail them out. That's that remix.
T.I. song.
I
Right?
said, I'll bail them out.
Right? Bail them out. Bail them out. Right? We finna steal that. Bring them out. We finna bail them out.
Bail them out. Bail them out.
Right? You know they coming. Who
Because
coming to bail them out?
There is their money tied up in there, so they're not really concerned about Yover. They like, wait a minute, hold up.
Thank you.
Mess with my pockets now.
Thank you. Y'all know this old school. But they say you want to
interest
with.
It's theirs. Dude, you could benefit along with them if you stick to the plan. Stop trying to do your own thing.
That's the problem. See, they
Yeah,
go
Mo.
back that conversation I'm talking about. See,
hey, listen. Well, I said that. Listen, they did. Look, I'm gonna put this post. You know, they said somebody else bought my vehicle. I tried to tell them the stock market bought my vehicle, but nobody wants to listen to me.
You know what? Because to them, again, know why? Because they were trying to do it. They mind had measured Miss Lamb.
They have not measured. I'm like, oh my God. I'm gonna show you. Don't worry, I'm gonna start all. I say I'm gonna show y'all all over again. I'm gonna start all over again in January.
But you know what? They had already saw you doing that. But the problem is again. But here's how it works. I got to say this because see, all y'all know this here. This is the difference, right? Because even in the fact that they see you putting in the work, they still measure you up against who? They measure you up against what they consider to be in their mind to be the so-called what? The archetypes, right?
Right.
YouTube personalities, social media
personalities. Like, are you kidding me? Like, how is that superlative to my situation when I have just as much opportunity to get a portion of what this thing is offering, and regardless if it's to that level or not, I'm still what? Still winning. Income producing.
Yeah,
it ain't even busted. They try to measure up against other people that's doing the same thing, like we're in competition or something.
Right.
People be evil, man.
Because they don't understand if it's $5 or $10, because you're gonna go through ups and downs. Keep in mind, we're in a knowledge boom right now. That's the difference. All of us in the knowledge boom. Would y'all agree with that?
Yeah.
So even if your timeline kicked off 2, 3 years, 3 years, 4 years, 3 years, and then like we just saw the stock market, right? Stock market, we're doing this right here. Remember, it was going like this. Let me change the colors. Y'all can see it. Stock market, we're doing it here. It's like this right here, right? And then what? Subprime lending crash happened. What happened? Yeah. Yep. And then COVID came, and then what happened? COVID. How many years that's been? Everybody what? 12, 13 years. Are y'all kidding me?
Yeah. Yeah.
If your well didn't, bottom out until 7, 8 years from now, but guess what? Within that time, you what? Stacking. And then what? It just go, So that work.
Yes.
That's something that you got still afforded to you that they don't have.
Yeah.
Yet they're measuring you. See how that work? See, that's the how asset ownership. That's the sweet spot about asset ownership. When you properly go ahead.
Oh no, go ahead. You finish.
No, go. You that was on your heart. I heard it.
Oh yeah.
I heard it.
I said, then they like, you need to, I know if you, how they said, I know if you making any kind of money, if you show me the type of house you live in. I said, do you even own one? Is the question. I've had mine 14 years. How long have you had yours? Do you want me to show you the equity in it? Oh, come on. I know you don't want to share with me. Please don't do
Who
that.
said that to you, Mo?
And you'd be surprised,
But you,
Chris.
again, see, y'all know
Say,
what
why
that
they
means.
picking on me?
They go back because they doing what? They trying to
Yeah,
what?
they try to measure. Yeah, it's like, why y'all? I don't even bother nobody. I just
They
do my.
want you to. They want you to reveal it. Why? Because again, to them, that's a way of, number one, it could be to what?
Yeah.
See what I'm
To
saying?
Mm-hmm.
We get it.
The stuff is all this stuff, all this information. Like like you could literally take I mean, we have real use case peers on this panel who like literally just shared I mean, every intricate detail. Like you don't even have to be on the panel. I remember when we first started with urban economic empowerment, right? And we started with the contracts or whatever. And this guy's name, I think his name was, oh man, I can't even remember his name. But anyway, he was in the Virginia area. He was doing pressing T-shirts. And all he did was listen, and he landed the government contract. He called me in the inbox. He was like, "Yo, I just had to call you guys and thank you, because just on your knowledge, I gained I secured a government contract, and I couldn't believe it, or whatever." He said, "I just want to give you your props. That everything you said was legit, right, on point and exact." And I'm like, why we can't have more people out there like that? Just we giving it to you, or we're sharing information so that you too can benefit. We could really be in our own little secret club and not.
No, Mo. No. You got to sign up for my course for $199. Brotherpolite.com. That's where you need to go to get all the information. $199 to sign up. Forget the free. They don't have the information. My course got everything. Just sign up for Goal in the Crisis. I'm serious, man. People for free for it's going on 5 to 6 years. Free information, free on a live YouTube channel on Garfield YouTube channel, and it was on Facebook for a long time too. Free.
See?
Hey, you know what? I think that it was a big play on how people wasn't up on everything, because a lot of our people be catching. They like to ride the wave. So if you already in something that people aren't into, it's just like a business or advertising anything kind of product. If people don't have it or they don't know nothing about it, then you have to figure out a way to make them interested in it. And then so the way that he made them interested in it was distracting them with something else, like, hey, the religion, this and this and that, get people hooked. And then now it's about how I can make money off of you. And you're going to like it because I'm real smart, because it was easy. I gave you, I broke down the Lord of the Rings for you. So now it's on the page, I can make some money over here. You get what I'm saying?
Lord of the Rings.
But again, because this is not, because y'all know how I am. I'm net neutral when it comes to personality, because I understand there's people out there who gravitate to certain things, right? But I know y'all get it. And I'm not saying that for the live, because for us, we really get the understanding of how, because that's another form of what we just talked about. That's a form of people, measuring. They're measuring. And it might be measured up against, what your accoutrements look like, right?
Right.
What vehicle you roll up in, what kind of little shoes you got on, what little hats you see. Again, when it's at a point of maturity, and people say you can still enjoy nice things and still live that life. But at a certain point, you start to realize and say to yourself, okay, am I doing this for me, or is I'm doing that for someone else? Because again, if you are a brand, and let's say you are getting kickbacks from that, that's one thing. If not, then of course it's just a personal, a marketing aspect that you're using to kind of get people to gravitate to you for what values that they feel like you're at least able to at least afford it. They're measuring that by your success by that. That's not how this stuff works, because again, consistency in terms of what we're trying to, share here is that this is a marathon that's an ongoing marathon that we're part of here. right? This is not a, you know, this is not, look, this ain't this Friday and get up and go and that's it. No, we're in a long term, focal point here. So
Yeah.
you're not going to be able to measure the value among worth on a, of course you can look at a P&L, say, okay, from month to month and year, but it's not going to be measured in that in terms of what you're getting from the knowledge. You see what I'm saying? Because you're putting
Right.
yourself in a position where you're never going to have to really depend on anybody else as long as these institutions remain open and free. You'll always have access to opportunity to what income producing,
True.
Yes.
void of the things that people are groomed to think that the only way you can be successful in life is you get what a certain value of education, et
Mhm.
cetera, et cetera. Y'all get my point?
Yep.
Yeah, that's why I gotta apologize because I guess we've been around for so long, and it's the land of the fools. I'm telling y'all, 4 or 5 years ago, how it is now, it wasn't like that. How stocks and meme stocks, that stuff wasn't like that 4 or 5 years ago when I got into this thing. It wasn't like that. Now it's bunkers. Everybody knows it's like a high commodity, and that's
Right.
cool. But you have to be careful when dealing with this type of stuff. We're not telling you who to sign up with and none of that stuff. We're just saying be careful because there's a lot of noise. What we like to say in the market is noise and
Yep.
distractions out here, and you might catch yourself spending a bunch of money with people you can't directly connect to. That's the problem that I like to point to, and Andre and other people.
Very
You know what I'm
good
saying?
point.
Right. So
Well,
we're just saying we're not telling you what you got to do with your money. You do whatever you will. You learn from whoever you learn. But over here, we've been in this thing for a while, and we've been doing this for free for the people. And ain't nobody ever will ever say African Emporium did this, Mo did that, Chris did this, they scammed, they can never say that because we deal genuinely with people. Now, if you got to pay for a service, then you got to pay for a service. That's just that. But we're gonna keep it 100 with you over here. You know what I'm saying? We come in what they say in the Bible, truth and in righteousness. We
Right.
we real generous people over here. We just teaching people how to do it from the ground up. That way you ain't got to ask or go over here to 100 different people trying to find out how to do the stuff that's out here for free.
I'm
Yep.
okay with
That's it.
learning styles. I'm okay with
Yeah.
learning styles because some people, have different learning styles. I'm not okay with somebody trying to just frame us and then I'll back off after that. But I just love the fact that African, the panel or anybody on here, the African Forum definitely has been very genuine with the never not I'll put you, man, the way you commentate the market and what's going on in the world, I'll put you up against anybody, even the best of the best with the television folk, because you don't just give, you give the what they say in the layman's terms to meet the terminology of the market, and it's repetitive. And we have to hear this stuff repetitive because it's not a normal lingo. It's not a household
Right.
lingo. Let me say that. It's not a household lingo. And so to repeat it over and over and not get bored doing it, because some people get burnt out, and that's why they don't last in this type of atmosphere. And that's why economics is a elective versus a regular
A
accredited
primary
class,
study.
because people get burnt out in saying the same thing because it becomes simplistic. Because sometimes even I find myself, if I'm sharing with somebody, I had to wean myself out of it and say, okay, don't get bored with teaching on an asset to someone, because this is long term. This is not microwavable, a food you might like today and next year, I like fish today. Oh no, I think I'm going back to chicken. No, this is something that's going to handle an entire household expense, so to speak. And so I had to find myself and say, okay, don't get bored. Get back to the first love of information, of learning, of going back and read the fine prints and the tea leaves and those kind of things, because That's what's important. That's what keeps you in the game. That's what keeps the research up on point. And so you can't get bored. And so I have to tell, when I first talking to someone, like, no, we stick to the research and the technicals because it matters. The technicals and the fundamentals and the research because it matters, not the quick fix, because if you start doing the quick fix thing, you are gambling, because someone said, oh, you doing this gambling. I'm like, well, last time I checked, I let you do what you do and I do what I do. I promise you, it'll probably take me longer to analyze what I'm doing. You're just going to go and pick based off of instinct what I can actually really sit and explain it. So I definitely appreciate the fact that you kept saying over and over in the beginning, do your due diligence. Okay, go to investigate it. Okay, look it up. Okay, somebody find this. Because some people, they get burnt out in waiting for a group of, the group of participants to come back and share it with them, something they just told them last week. They'll get burnt out quick. Like, okay, you don't get up. I have to get a remedial or something because I'm not about to keep doing this over and over.
Hey, Mo, but that's how you weed people out too.
Right. Yeah.
What you saying? Yeah.
I appreciate him doing it over and over live all the time with no, oh God, I gotta go over this again. And that's what's important. And that's where the love comes in.
Not a lazy man's game.
Right. David says with this product, I make it with love. I think that's when you make, you share this information with love because you understand why it's necessary. So it's like I remember the first you say, man, I'm glad I got somebody to talk to about. Woo, I couldn't wait for y'all to get okay. Yes, let's go. I'm ready.
Back.
Yes, like yes, or whatever.
Because
I remember
this is an island.
I used to fall asleep on African Emporium on Sunday, man.
It's an island.
Still fall asleep too.
That's
all right. Still fall asleep.
it's an island out there, and you guys know that now because you're now initiated. See, y'all know this stuff. Like when you become initiated, you don't. As the saying goes, you don't go back to sleep once you wake up.
Oh, you ain't lying.
Right? You don't go back to sleep once you wake up. It's hard to go back. It's hard, bro. I think that was Dr. AIP, Dr. Ayla Africa. He said, it's hard. You deal with a certified Negro under warranty, boy, they had you perm your hair again and probably want to go back and give your money away at the end to the y'all know what I'm saying. Because there's some jokers out there will definitely try to take you there. Because again, go back to what we were saying earlier, they measuring. Because that's the only thing they know what to do. That's all they know how to do, right? They don't understand the value in that once you become, quote unquote, interested. So that's why I always say this too. And of course, y'all know I've said it like a million times for a reason. There's no such thing as permanent nothing. There's only permanent interest.
Right.
Because people fall out with family every day and never deal with their family again. That's supposed to be blood.
Yes, that's true.
Think about that. Seriously, the world is as humans, we are unique in a lot of ways. It's the interest that keeps us, bound and glued thoroughly in the way that we need to be. Because again, within that, you see the morals, you see the characters, you see the, the ethics and the passion and the commitment. That's what gets people out of bed every day to go deal with all the foolishness out there. It's that interest. Either doing it on the survivor side or it's that expense value or surplus of your passion. As they say, if you have a passion for something, you never work a day in your life ever again. That's entrepreneurship. That's asset ownership. That's a different type of power you will once you be able to garner that. And so this gives a person that because again, it's so open source in itself because again, what do you need to get started? Again, we go back to the blueprint for a reason. What do you need to get started? You see what I'm saying? Think about that. Cell phone, laptop, computer, tablet, Wi-Fi, broadband connection, some knowledge, and some what? Some capital.
Yes.
You working.
In there.
See what I'm saying? They don't care about you. They can't come at you no kind of way. I know I say it like a million times, but I keep saying that for a reason because it's somebody that's going to hear that and they're going to resonate to that and they're like, yep, that makes sense. They cannot discriminate against you for race, color, creed, sex, gender, orientation, any of that. They cannot. Good credit, no credit, felony, no felony, baby mother, no baby mother, nothing. They cannot. If you can fund that account, you can play ball. And you don't even need a bank account to fund it. You go right to Walmart, get your green dot, you in the game. Let's go. You instantly get a bank account now. We're in the business of connecting the dots. That's what makes it different than for a lot of other people who are still kind of like, I don't know. I don't feel good unless I work hard for it. That kind of crowd. Or all I know is to work, that kind of crowd. Okay, but why, you can work and do this as well, right? You don't have to be one or the other, right? You do know that, right? See, that's the part where it's hard for people to accept that. Because they feel like if they take from that what they worked hard for to put it into something that they feel like that doesn't require that initially from the onset, that's spooky a little bit.
Do you think it's spookism, or do you think it's because they got a lazy mind frame?
But see, that's the aspect of that, because you could say, like we say, investing trade is not a lazy man's game, right? That value of spookism is the fear, right? Because y'all know fear is just basically what? False evidence appearing real. That's a form of spookism. Let that marinate. Danger is one thing, but fear is another. Fear is psychological. Danger is a tangible. Don't go over there because you see that. You see them alligators sitting over there, right? Don't do it, right? Don't go up there because you know what's up. Them brother around the corner, you know they waiting, right? That's different. That's danger. Fear is just more psychological. You convince yourself that it's what it's not, or it's whatever. That's the part where we're eliminating that. Because there ain't nothing fearful about this market. It's interconnected into your life more ways than you probably even want to give it credit for. Why? Because everything that you probably got in your house right now is either publicly traded or connected to something to that level. Even if it's in a private industry, it's still a part of an industry that has a public, direct connectivity to that of an open source market that you can also invest in and reap the benefits of it on the back end. That's a cash back reward I would always love to be in going forward for the rest of my life. Your credit card can never give you a cash back reward on what you really can do from your investment power. Let that marinate. That means you're going direct to source. Right? You're going direct to source. I go straight to Apple. I go straight to Nike. I go straight to Amazon. I go straight to Google. I don't mean their websites. Right? I don't mean their websites. I go straight to the stock, to the company, right? To the investor relations, in that perspective. And then when I'm done with that, then I can go to the website. Let me go shopping today. This is nice. This is nice. Right? Because you got it off the front end. You got it off the front end. And you can enjoy it on the back end because that front end paid for you to have it on the back end. See, that's the connectivity that we're trying to get people to see, because we consume more than we spend, than we invest, obviously, right?
Mm-hmm.
That's a problem. And then it's like, we keep saying it for a reason. It's about 1.3 trillion now, something like that, 1.5 trillion, somewhere around there. That's a lot of money we spending. If we just allocated a third of that, a third of 1.2 trillion, let's say a trillion, third of that, a third of that. That's 333 billion. Look at some of the budget plans that came out of the infrastructure bill, or even with the CARES Act and those things. Look at $300 billion value worth it in that, in terms of what the stuff that got allocated to that. Did y'all know, and I know y'all know this, but y'all know how much it cost for them to send everybody a $1,200 check when they sent that first check out? Remember, we got the raw data. We went over like a lot of times, but I like to throw you a little curveball out there every now and then. Do y'all know how much that it cost the government to cut everybody a $1,200 check in America that was obviously, legit to get one? How much was allocated in that budget for that?
Oh,
This is that mind sweep moment here where it's gonna be like, God, dog, boy, see, we got
Billion.
it was definitely billions, but how
How
much?
does it cost to send money like that when they print it?
And that's one thing, because they just send it digital, right? It was digital, right? That's even worse, right? Because they just put some numbers in the computer, boop, 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 and then it sent it.
man, because you have to the labor that it takes to. They have to hire people. It's extra labor involved.
But here's what's even interesting though. Again, I want y'all to think about this for a hot second. The cost that it took the American, for them in Congress to allocate a certain part within that CARES Act that they're going to send obviously each individual eligible for that of a $1,200 check, or what was the first one? What was the first check? It's $1,200, right? I think, yeah. How much did it cost the government allocation for just to make sure that check was cashed for that each eligible individual in America that they assessed? Obviously, however they did it. How much was that worth? I don't know if y'all remember. Y'all probably don't remember, right?
I don't know. Let me look
Wasn't
it up.
it in the billions?
It was definitely the billions, obviously, right? Because we got about 300. Well, they say on paper, right, about 350 some odd million people in America, right? Then of course, the amount of people who are eligible, taxpayer and citizens who can receive that kind of level of government, back, by way of RS, record keeping, right? That makes you eligible to receive that. So by that, they come up with a number in terms of what they feel like will cover that expense, right? What was that expense on that CARES Act bill for that portion?
What was it? 56 billion?
More
More than
You
that?
said on what again?
on the CARES Act. That first CARES Act, how much did it cost the government to send everybody a $1,200 check?
I think that was 1.4.
What the 458? Let's see.
1.4. 1.4 trillion, I think.
No, that was the overall package. The package was up in the trillion, but set aside in that package, there was a certain amount that covered everybody to get that $20 check.
Oh, the stimulus checks.
Right. That's how I should have said it. My bad. I should have said the stimulus checks. It was roughly around, and I just throw it out there at this point, unless y'all want to keep trying a little bit.
Yeah, I'm gonna keep
And
trying.
I'm a Are you gonna keep right? That's what I like. Let go. Let go.
35 billion.
How much?
Wait, they said cost between between 300 and 435 billion to cut that check.
So it was roughly around what?
So,
a third of $1 trillion.
Trillion.
And I'm using that as a rough
350.
Right? It was about close to around about what? Because y'all can look the data up. That's what I love about. Because y'all know we can look this stuff up now. We know how to, we own it now. Because we know how to look up them House resolution. We know how to go pull up them packages. This our lane now, right? I love this stuff. So somebody saying 350. So okay. So on a paraphrase version, we'll just say what? We'll say a third of $1 trillion, right?
Okay, a third.
We'll say a third of $1 trillion. Everybody fine with that?
391 billion.
Because it wasn't no more than, it definitely was not a half a trillion, right? So over got 390 billion, right?
Okay.
You saw us
that was $1,400. That was the $1,400. I'm gonna say
Right.
I'm gonna stick with 350.
So it was roughly right around I want to say was it 285 or 245 million? Oh, excuse me, billion.
Okay.
So that's why we'll say a third, but roughly around a little over a quarter of $1 trillion to send everybody a $1,200 consumer check. We have spending power of 1.2 to 1.3 trillion in Black America alone.
Billion.
Say again. Somebody say something.
Yeah, I'm late. I cheated and Googled it real quick. It said 150 billion.
It was 150 billion, right?
Mm-hmm.
So 100. That the first stimulus check or the second one. I don't know which one. Which order did you put?
That
The
was
first?
the first one.
The first one. So about 150 billion. Right? And I think they attached maybe like 100 billion insurance to it, to some regard. I remember reading some article like that. That's why I came somehow with a $250 billion or a $250 trillion, excuse me. If we just use the raw number of 150 billion that Sunday pulled up, 150 billion sent every eligible American that's tied to the IRS a $1,200 check. Now, if we use that $1.3 trillion ledger as the base case in our spending power, that still leaves us with what? Over $1 trillion, what? $1 trillion?
Mm-hmm.
In our community alone, meaning we can sue a 1.2 trillion spending power and then run circles around everybody else. but we, oh my goodness. Oh my goodness. This is the mindset that separates why we can't really elevate. I didn't say evolve, but just say elevate, right? Eventually we're going to be forced to evolve one with the other. But this is the separation. So we have the ability, is that people don't have it. If we got that kind of level of spending power, then imagine if a third of that was investing alone, a minimum of a third in equity assets. Because simply when you bust down your money, y'all know about the 80-20 plan. They got the 80-20, right? Remember they changed that recently. Right now it's basically close to around what 70-20-10, right? Because now crypto is a whole new different can of worms, right? It was late adoption for a lot of people for the investment portfolio. Now they're saying, because in the beginning it was like you shouldn't allocate no more than 1% in the crypto. Now jokers up there in there 5 to 10%. They ain't playing around. Meaning the fund manager side of the house. We already been we already big time in it. But see what I'm saying? I'm just speaking from the spending power alone. That's 1.3 trillion. Look at, we can sue 150 million, and that's for 350 people. If they only saying about 46 million black people in America, then imagine what that's going to be. How many times does 46 go into 350? Anybody? We'll just say 45 for even them. How many times does 45 go into 350?
45 into 350.
Anybody?
7 times, 7.8.
Yep, 7.8. So
7.8.
7 times.
Is it 7 point? So what's 7 times 1,200?
That would be
96,000.
Huh?
How much?
That's 8,400.
84,000.
No, 1,200 times 7. 1,200.
That's 8,400.
Times 7.
Oh.
Yeah. 12.
8,400.
That's what everybody got? 8,400?
Yeah.
So that means we can afford to give every black person in America off that spending power $8,400 check. Mm-hmm. And here's where it get interesting. This spending power, again, this is money that's being liquidated. How many times does 12 go into 1.3?
1.3. What?
Trillion?
1.3?
Just 12 going to 1.3. All of this it's basically it's over 12, right? 1.2 to 12 is basically a whole 12 months, right?
Yeah.
So that means we can afford to do that every month. Send every black person in America $8,400. Imagine what you could do with that level of acquisition in your household. And that's before even becoming an investment.
8,400. Let's see how many shares of S&P
now y'all,
500.
Now you see where I'm going with this. Now y'all see where I'm going with this.
17, almost 18 shares.
Oh, which stock you talking
about? S&P 500.
No, just the S&P 500 alone? Okay, gotcha. Right? Just buying straight index fund, allowing it to work.
Yeah.
How many shares is that?
17.987152. So about 18 shares almost.
So that's about 18 shares for what, $400 ticket, right? That's 18 shares. What? But what's interesting about that, the kicker is that it's 1,800 shares, basically about a month, every month, right? Every month. That's a principal, right? That's principal value of $8,400 a month. Now that times 12 is what? What's 8,400 times 12?
Just 100,800.
100,800, right? I think they say base case. Well, I ain't gonna get into all that because I hold on to can of worm, but I'm finna go into the whole reparation. I ain't gonna do it. All right. All right. At the 100,800 on a per annual basis, right? So we'll just put per annum, right? We like to use that terminology, right? Per annum, right? Per annual basis, $108,000 in acquisition value, or what they call, I would call it investment value. If you took half of that and allocated towards income producing assets, stocks, derivatives, whatever, index funds, allocate a little bit for crypto, whatever. The other half went into other investment vehicle ideas, crowdfunding for real estate, angel investment for those kind of projects, doing your own per se. But more case, I would be more inclined to do what they call group investments, right? That way everybody has skin in the game, no one man pulling all the strings, right? Everybody has equal power, right? That's a $500,000 value that we now get to group aggregate together. And now we can take that money and do it the right way. No shots fired to Tulsa Real Estate Fund and all those things like that. But guess what? This is 100% transparency where everybody has a co-op in the project, 100% equal value. That's $500,000 per every person on an annual basis. And now you can really go buy a block, a city, or an investment high rise, or this, that, and the third. And everybody has equal stake value in it. Who's willing to be in that equal state value? See, this is how money has always been utilized on the other side of the track. Y'all know what I say when I mean that, right? Because that group aggregate value is always on code, even though when it's infighting in the public, but behind the scene, it's an on code perspective of willing and controlling because they've been able to kind of amass that, right? Off, the death and this, that, and the third. Yet we got a spending power that rivals some of the wealthiest nations on the planet. And we're a nation inside of a nation. And we got a 1.3 spending power that's eclipsed entire nation's actual, value as a whole, their whole GDP and all that. Make that make sense. How we're still afraid to realize the extent or the extent of why investing some of that capital of the spending power back into the same things that we consume more than anybody else on the planet, obviously, right? Because we consume them like that. And we don't have that kind of level of education or intent or interest to want to do something like that. Like, how are we so disconnected with what reality, right? Right. The value of insanity, we're doing the same thing over and over, expect a different result. Again, how is that not registering with critical thinking? So that's a problem. That's problematic. And because you say, well, if they already looking at us, I say them, meaning people who are out there, meaning anybody who's looking at you. And like I said, like we said earlier, they sitting up here doing this all day, every day. They just sitting there measuring you. But they ain't paying attention to things that they need to be paying attention to.
Say that again.
That's the difference. This is why we can't go up and to the right really fast, like the SP 500 did over the past 12 years.
Hey, up and straight up.
Straight up and straight up. And
then it's up, then it's up, then it's up.
See what I'm saying? And the sad part about it, guys, we can do that literally tomorrow if everybody just actually stood up. That's the difference.
Man.
That's the difference. It ain't no, okay, we got to retool ourselves. Everybody got to go back to college and this, that, the third, and learn how to farm and grow beans and rice and, chitlins and cook clean chitlins better. No, we ain't got to do none of that. Because the vehicles is already on the road. These financial vehicles are already on the road. And we can backtrack them by the charts, the technical analysis, the understanding, the stuff we learned when we was in grade school, elementary. Look at this, Jimmy. This is the pie chart. This is the bar chart. See, this right here went up this much. This here went up. The train here went this further. This train here only went this farther. Which one went the farthest, Jimmy? He was like that one in the middle. Well, guess what? That was CSX stock. that was the stock behind that train going further because they delivered more products on their freight. See, man, make this stuff make sense, bro. Whatever you throw out there, we're gonna be able to kind of give you the backstory. Tesla, right? Okay. Ford been around since when? Forever. Guess what? And we sat there and watched it You get a new lease on life on the COVID lows at $4 a share, and now it's sitting up here at 20. How much is that in a gain in about a year and 9 months? That's a 500% increase. How many people get a chance to get a 500% increase in a year, about 9 months, 8-9 months? 500% from $4 to 20. Remember, just think about that. Remember that group aggregate I was just talking about? If we just took 500,000, or we just did our own individual, and we took half of that, let's say you put, you see how that worked?
Oh, I got my deep option. It's doing good.
See, we got to get in the, go ahead, sis.
I bought it February last year.
See, leaps.
I got it, I think $10. February 2020. I think it's up like 500 something bucks.
See, that's when what they call money on steroids.
Yeah.
No options, right?
I would have been out $20.
Yeah. See, that's the part of the game where we're trying to, and all we need is peace to be able to function and do this properly. And we need what? The same people that have blind faith for other things that are trivial and they sitting around waiting for something to happen. We're actually trying to will things to happen by being what?
Patient.
We're being forcibly thrust into knowledge, learning, and proper methodology. And we are backing it by what? Data.
By data, yep. Because I look at the chart, I just look for my higher highs and my lower lows. Okay, I'm still good. Keep going.
See?
Check it out. Keep it moving.
I'm sorry, Monica. I failed to realize that you had went to Harvard or MIT to get your understanding about statistics and all that, so you could be the best investor out there. I'm sorry. I forgot to give you your accolades and give you your, let me give you your flowers right now, because I forgot. You got that degree sitting on the wall that you went to school to learn how to invest in the markets.
And I put since we was doing well, I put my business partner on to it. I think he up over close to 200. So that was exciting. I caught it at a good time.
See how that worked? Because now you begin to share that info down range and up range. Both. They say pay it forward, send it down and up. And side to side in our case, because again, we're just excited to be able to share this with anybody who's willing to listen. Because this is an island to himself industry, especially for us, because you can't really talk to a lot of people about this stuff. To them, it's like you're gonna be speaking Charlie Brown teacher language. You be like, bro, I'm just trying to. That's all they're gonna be hearing. They're gonna be like, man, what a turn up at tonight. What? I just sat there and gave you the blueprint on how to get some. Oh, depressing.
Mm-hmm. Yes.
I mean, you wear it because you really want to help, right? And not that you're trying to force people on, because we don't. Well, I know, definitely that's not our mantra. It's just that, we're excited for the level of potential growth that people can possibly benefit from when that they have ability. This could probably be a good benefit,
They just got that $8.6 billion contract with the GSA with them Ford vehicles.
It's finna get a lot. Look, we're talking about the infrastructure. We were talking about the infrastructure stuff the other day, right? I was supposed to do a third part too. I guess I'm kind of slightly doing it now in a sense, because a lot of them same stuff that we talked about, they did exactly what we thought. They started breaking out.
Yeah, I said, boy, the government ain't never gonna go with another company. Ford just got them on lock.
Ford, GM, because they got them unions. Yep. That's why they would put them as the kind of top dog, and they kind of excommunicated Tesla, but it don't matter because Tesla already, they straight. Yeah, they gonna get theirs commercially, right? Yep. With or without government help.
Yeah, they really don't. They show
they best in breed, and pure play on that space,
Yeah.
So again, this what we're doing here is not, again, as we say, it's not rocket science. It's understanding, right? The proper way, knowledge and understanding, right? Wisdom, knowledge, and understanding, right? We're gonna use their text, right? That text, I should say, because if people really want to be serious, then at some point you're gonna have to really start, as they say, put your money where your mouth at, because your future is somewhat linked to your ability to make these kind of executive decisions. Now you're gonna take some L's. Biden took some L's, right? We all done took some L's.
Yep.
You're in the path of doing that the same way you were sitting there at college, binging and partying at the same time, taking L's in the same way, right? Right? And then all of a sudden, in that case, you was thinking that, okay, I got a program underneath my belt. I should be able to go out into the workforce and, and expand on this, right? But it comes with a value of blind faith, right? There's no security just because you got a degree sitting on your wall. There's no security with that whatsoever. The biggest misconception, right? Because American education is fading. People realize that it's overpriced and it under-delivers, right? That's just what a lot of the data is already kind of portraying at this point. That's why more people are taking alternative routes to being able to access to what? The global markets, right? That's what you're going to when you come out of college, the global markets. Do you not? You do. You go right into the global market. Some people just undercut that and come in it through this way. Other people do it through entrepreneur endeavors. It's not about, again, a lot of the times the tools you use to get into is what, it's the fact that you're in it, right? You found a way to get in there. That's the part about it that's exciting. And so I love that because this gives you that ability. Because again, we can show you scenarios where, like we've done plenty of times, we've done it on here a lot of times, where we've shown people how, strategic investing in the markets can outperform that of a college debt.
Right. What's those
I did that. Oh, go ahead.
Oh, I was gonna say, what's those red and blue arrows
On my screen right now?
on yours? Yeah.
With the moving average or the
arrows, like the I guess like the bluish, the purplish look.
There's a ton of arrows. Those are called channel breakouts.
Okay.
Those are channel breakouts. Channel breakouts, and that's you can add this to your chart too. This is the free version. I don't pay for it anymore, but it gives you it's kind of like I have like a squeeze momentum scenario in a lot of ways. It gives you at normal price fluctuation that obviously propagates that of a breakout in that moment, and it'll give you the breakdown in this case. So it's always going to be like a plus or minus 2, right? You see, as a deviation within that candle at that moment.
Oh, okay.
It gives you that value of if you want to use the word, like I say, a deviation of that breakout. So it's obviously a negative. So it'll actually sometimes it'll allocate it for the volume coming in instantly if it's sell volume, and it'll pop up instantly, right? If I was on the 1 minute chart, it'll pop up. Then you'll know, okay, this is a bearish signal already out the gate. And to the extent of how it's going to turn out within that minute, that's a part of the trading within you have to see, but it'll instantly give you that readout. So it's called a channel breakout, so that's when you're doing a lot of, especially really day trading. It helps, every little bit helps when you're doing it like that, right? But yeah, that's what it is. See right here at the top right here, channel breakout strategy. That's how you look it up in Trading View. So yeah, so again, that's this stuff is all about, again, I know it sounds like as we say, a broken record, but repetition becomes repertoire. For a reason. You have to kind of continuously, you have to learn how to, propagandize yourself, right? But thoroughly, right, in the right way, not with craziness. Don't be around here acting like you Superman. Now you ain't finna run out there in front of Jake them, right? And they got them pistols. You ain't finna win that battle, right? But now you have to learn how to convince yourself that you are more than capable and willing to do that. Again, this is the part where we're working on knowledge, not just thinking and believing. We're actually practical, and we approach things with a level of critical thought and analysis, and then we act on it much as possible, because again, this stuff does move into your personal life. It really does. I'm sure y'all can definitely vouch for that. This stuff, it definitely helps your personal life a little bit better too, because it's multitasking, it's organization, it's critical analysis, it's a lot of things that we deal with in the markets day to day. All right, so again, that's the things we're talking about tonight. So again, the EVERGRANDE scenario, the whole ideal of the CPI data, right? 6.2 today, 6.2, right? And then there's another part real quick, and we can get ready to close out here shortly. The other part was the Fed indecision. We're talking about what the market did today. Of course, in this case, the market pulled back, but this is always a good case study or a learning point to come from, because everything that we do falls in training. It may not always come like direct. Okay, what's this, that, and we go over every technical. We just break. All this stuff is implication, right? It's application based upon implication, right? right? A lot of this is, again, day-to-day action. You learn in real time a lot of times, right? And we watching markets and assessing markets, you can see exactly a lot of things that we're talking about and connect those dots because they're all very, superlative. Again, they all connect, they all mesh, they are part of the concerto, right? So again, these lines that were drawn before this move happened, this pullback was just that. We understand what's going on here. We knew it was like, okay, we finna get a pullback here. We talked about it. We're talking about it actually over here on this green candle here. It was like, okay, we finna, everybody planning for that 470 at some point. I think we probably gonna get it at this point. This was what, last week? Yeah, they're planning for the 470. Okay, we got up and hit 470, and then we rolled up with the top of the band. We don't make the rules. We just play by them. Right? I can't say that. I can't say it no other way. We don't make the rule. We just play by them. So that was instant opportunity there, right? On top of a lot of things that come along with that, that's just one part of a technical. Then there's other things that may weigh on that aspect of stock movement in terms of a fundamental scenario, right? So we got a Fed indecisive moment going on right now. Over the last 3 days, a lot of these federal governors been speaking, right? I'm sure y'all been probably catching some of them too. Brainerd, Bullard, I think he spoke. What was the other? Who else spoke? Forgot the other guy. But they're kind of signaling the same things that we already knew. That number one, inflation is not transitory, and then number two, the value that the supply chain issues. They can't make excuses and blame it on COVID alone anymore. Right? They can't blame it on COVID. It's not just COVID, it's other aspects that's weighing on it too. A lot of that's coming through the dilution of the dollar, right? And excessive backstopping markets that's exacerbated the issue that's causing inflation to be more than what it is. So they've yet to take full responsibility, but they're hinting to the value that they're causing the problem, right? And on top of that, Jerome Powell's up to be seated for his seat. Either he's going to be renominated as Fed chair, or he's going to be excommunicated. Well, guess what? I don't know if y'all caught this or not, but the reason why also markets got timid and frivolous this past 2 days, Joe Biden has been interviewing potential people for that Fed chair spot. That's a problem, right? Because markets have rode the wave off the back of Jerome Powell being ultra dovish and just feeding the rich, literally feeding the wealthy people, just relentlessly, right? With thinking like a robot, don't want to deal with real data, don't want to deal with the real world. Keep claiming that they're about diversification in terms of being able to backstop American employment to kind of make sure that everybody getting their fair share of opportunity in America, which we know that's a farce in itself. That's why I think they say black women right now is on the bottom of the totem pole for employment in America. I'm not making that up. She's the most educated and has the most debt in America for a student loan, but she's least to get hired right now at this current state and time right now in America. Go look it up. Black women. Make that make sense. So this is the reality again in terms of the data, right? So again, their diversification policy is failing miserably in terms of the Feds. Because again, they still under the old school mandate where a rising tide lifts all boat. If we give it to the market will figure out how to get it back to the black woman. Stop. Are you kidding me? Apple buying back shares of stock. They ain't buying application to get people to work. Berkshire Hathaway buying more stock. They ain't trying to put black people to work. These companies doing buybacks, buying their stocks back. They ain't buying diversity training and other HR members to come in and train, retool people to get more diversity, inclusive policies, and man, stop. The name of the green has always been what it's been. The name of the game has always been what it's been. Greed. So you're fighting a mountain of reality that people tend to just want to try to overlook because they're caught up in this whole blind faith that the government got their back and other things got their back, and no one want to deal with the reality of things. Except us, right? So yeah, this chart says roll over. We rolled over. We got a little 6 points, 6, 7, 8 points that we plan for. 6 points that we plan for, right? And if it bounces tomorrow because the market's still greedy, then so be it. That money made. and we just watch, rinse, repeat. This is the income producing in the real time aspect of the market. The bigger macro picture still puts us at a what? At a win. Even if the market did pull back and give us that correction that we've been planning for at some point, we got some gaps to fill. We get it, right? We got gaps to fill. We get it. But ultimately, at the end of the day, markets can remain rational and can remain what? Solve it. So again, if like Sister Monica said, like we've always said on here, if their money is tied up in this too, do you really think they're gonna let this thing just crash and burn the way that people want it to?
It's the only thing that separates them from us.
That's it.
It's their money in the market.
They even let this thing just crash and burn just because somebody feel like, oh, this is just bad. It need to crash and burn. Why don't you?
Their documented dollar. Cause without it.
Let that marinate. I'm just saying the playing field gets even. That's exactly what.
they ain't trying to do that because the emotional high, it ain't gonna work no more. That's categorical status, so it's only their monetary
right.
value
that's been fading, right?
Mm-hmm.
So this is the part where we're trying to get people to start the what? Seeding now. Yeah, you already late, but they don't necessarily mean it's over. It's companies innovate every day.
Not over.
Right? These companies come into business. Rivian just IPO today.
Just IPO'd and stashed and already gave you a fraction of shares.
I think 106 billion valuation. Stock was supposed to be slated to come out at $70 share. It opened up over 100. That means they had a surplus, a kicker of already 30 plus in that. That's like billions of dollars in extra surplus instant that was just given to them.
Already in there.
And they ain't sold not one car.
And Stash already gave you a fraction of
share.
Stash
already gave you some fraction share. Like, here, hold this here.
Don't hold this right here. I'm beginning to think these Stash parties is a little cool now. I'm beginning.
Yeah, of course. They did it with everybody. Remember, Honest came to business, same with Honest. The company did with baby formula and baby stuff, Honest brand. Same way, as soon as they IPO, man, come on. Honest gave it an Honest stock. I'm gonna say that because they had earnings today. But that's it. They're trying to, they're cluing the people like, hey, look, we even got the music. Right? They even got the little banging music. Boom, 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 boom. Y'all know how it go.
Freestyle.
No, somebody just make you want to rap. You ain't got no ball, but you still want to rap when you hear that little instrument to come on. What's that? Right? So this is. Say again, over.
Hip hop stock star.
Yeah, that's basically what it is, right? That man, you could make this stuff up.
Man, that's the beat to start rapping to.
All you hear cash registers ringing, and you just get to think about your stock. And see, we doing it the right way. We get excited with that cash register.
Hey,
that
earlier
when
when
want to
Chris
get some
was
balls.
talking about it, earlier Chris was talking about it, and then Monica spoke on it, like, about people doing people dirty. I think that you did us dirty. You didn't start hitting the spy, like hitting us with the spy until like the middle of this year. And I've been winning on spy ever since then.
Wait, hold on, Sonny. Wait a minute. Sonny said you did us dirty. Nope. But after pouring the
He's been doing
since 17.
Too long for him. Yeah, he too long for him not to tell us about Spy a long time ago.
He
if
did
tell me about Spy a long time ago, I'd be rich.
No, your level of knowledge and understanding wasn't there. He been telling about Spy since it was at $232.
When he told me about Spy, it was at 368. I still got mine. I still got the alert right there because I was waiting for it to get to 370.
Don't make me pull the receipt and video when you first came on. We always have to spy up.
I'm telling you, nobody was telling me about like what to do, getting
Don't
into
make,
none of that stuff.
don't make me do it, Sonny.
Sonny, the question is, are you ready though?
Get him, Brandon.
Are you ready to trade the spy? Because
I'm definitely ready. Like now, so great. I mean, I ain't gonna say great. I'm
Yeah,
I'm so
he on it.
okay at this that I can answer a lot of different challenges.
Yeah, he be on it.
is the spy a challenge for you? Do you think a spy would be the
Oh,
challenge for
did
you?
you guys see my Did you guys see my markup? So I know a lot of people feel like SPY is gonna go down. My markup is by Christmas, it'll be at 482.
Let me see your markup.
It's already there. It's surpassed it today.
Ooh, so you
Is
did
it?
good.
Yeah. When did you put up your markup? When did that happen?
When did you do your markup?
Hold on, let me see what the spy is
Man,
at.
my first bet.
What's that? 482.
August. I think
Hold
it was
on.
August.
No, I take that
So
back. I'm sorry. The spy is
no,
not
I
at
said
482.
not
I'm about to
462,
say
482. 482. So 482 was the markup that I have as far as for Christmas. And so that's based on the trend line that it's been doing since December of last year all the way to now. And it has a straight up trend line. And I was gonna mention it, but I didn't want to cut Obo off because he did the same thing that I looked at to see the trend line where when he was talking about the 45 angle and he was
Yeah.
talking about the straight up and the straight down. So
Yeah.
I had did that on the squeeze and looked at it and it was the same thing. And when I wrote it up, it should add up to about 4230 by the time Christmas hit.
Let me see your
I had
markup.
put it on the page too. I did a markup on it and put it on the page.
Come on, let me see. Let me look.
how confident are you? I will wager and say you're wrong.
Oh, I see it. You did the wait. What is that blue
Well,
stuff?
we'll see. I
Just,
mean,
just for shits and giggles.
we'll see.
Just for shits and giggles.
Well, I
Hey,
mean,
yeah,
shit.
no,
Wait,
let's
wait,
do that.
We'll
Let's do
see.
that. Let's bet.
wait. I
Over
see.
Eddie.
Hey, I was trying to tell. Hold on.
Wait, Sonny, I see your markup.
Oh.
You talking about that little blue thing you got on the side? It says 487,
Yeah,
60,
yeah.
487, 69. What is that?
Okay, Mom, we know you
Because
can't
all
read.
of my
It's
markup
okay.
been
Be quiet, Chris.
all of my markup been right since then.
No, I don't. I'm trying to see what the I mean, I was just trying to see if there's something that he like drew out, or is it some indicator he came up with, because I know like the Fibonacci and all that has the percentage stuff. That's why I was asking.
Okay.
What is that?
He's trying to steal his shot, steal his strategy.
I am, if he tell me what it is.
Don't tell her. She's trying to steal. She just made it clear, brother.
I don't steal, I just borrow. Sonny.
Oh, what you say? You gonna give it back?
Yeah, he can have it back. Sonny.
Yeah, he left
Like,
at the right time.
you just
Smart
don't
brother,
know.
yeah.
No, he ain't leave because Sonny already knows. We already
No, I
have
didn't
it.
leave. I was I'm in the middle of I just got out. I be working while I'm working and I do stock. I got a lot of shit going on.
Well,
So
Sonny
I'm
and I,
broke out here. I'm really trying to make it.
we
So,
already got a date at AM. So Chris, you be quiet.
Don't let her try to conquer you like the European.
No, I got a study method that I do. I'm in Cali, but I wake up at 3:30 every morning and I do my studies. I got my updates for the news as far as what's hitting in the pre-market, and then I read those real quick before I jump in the pre-market. And then when I jump in the pre-market, I see what they're doing. Then I look at what they've been doing for the last 6 months. Then I go to the last month. Then I go to what the news has been saying, and a lot of times they pay off the news. So then I do a compare and contrast, almost like what Oba was saying earlier. as far as when you go into the actual stock and what they're doing, then you go into the Google. So I kind of do the same thing. I basically took the methods that Mo gave me as far as like the work ethics. I took the stuff that Chris gave me as far as doing your due diligence and reading the trajectories. I took things that Oba gave me as far as like being out there and really putting your money on your stuff and really focusing on what you really putting your money on, and then start doing it like that.
Ding, 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 ding. There you go. You got the pot of gold.
So it's
See,
been
Mo,
working for me because I
that's
first
good.
started off. I first started off with Mo's method with, okay, if I can make $20 a week, I'm cool. And
Mo
then it
stole that
got to
from somebody.
no, I got that from, yeah, I mean, I'm being honest. You know,
Yeah, no,
I
I
was
know. I
like,
was just messing with her. You
because
good, bro.
I was like, damn, I'm gonna do $20 a week. So then from like my first 100, I was like, oh shoot, I'm gonna do 100 a week. Then it went from 100 to like, shit, I'm gonna try to hit 1,000 a week. And so I really just started the 1,000 thing because I've been kicking Pfizer and Merck's ass. So that's the only reason why I've been doing the 1,000 a week. But I just really started that like last month.
Okay,
Go
that's good.
kicking butt. 1,000 a week. You got me
Yeah, I
beat.
just started that. That's my goal. It's not something I'm hitting every week. Like last week I hit like a mug. This week I'm not gonna hit. I probably will get 6, if that.
Yeah.
That's
Because
still good.
Pfizer been staying stable, so I really haven't been able to really work them.
Oh, you ain't
So
been working.
I've been betting on I've been
Not
trading with Pfizer,
Yeah.
with Intel, and with
Got him today. Yeah.
CMI. Hey, you guys was
Yeah.
on CMI?
TMI. Is
No,
that?
CMI.
Oh no, I don't have that.
So I put it in the group, right? So the infrastructure bill, I took Oba's method, and then I looked up what stocks would be the best, more effective when it comes to the infrastructure bill. And then so the different stocks that they put, I just started loading money in all of them. And so it actually worked.
Hey Sonny, did you check out that ETF that I put in the back chat?
Uh
Would you put?
I think I put VPN.
You know what I thought that was?
What's that? Hey, you talking about
The
Goofy.
VPN.
Goofy. Goofy.
I get it because I thought it was the VPN. Like now, people be talking about
The
the VPN.
virtual private network. Look
For
at
the
Mo
crypto.
Goofy, y'all. She country.
I'm gonna be
hey,
crazy.
that Rivian sucked. I ain't gonna lie. I don't know who put that in the back chat, but that sucked.
It
that
just
was
came
Rivian? It came out
IPO.
today.
no, I know it just came out, but
Yeah,
usually
IPOs normally do that though.
no,
They
I
start
know.
going
I
up
was
and
just
then
getting ready to say usually IPOs up and do the up and down thing, but
yeah.
because of the promotion, I'm just speaking from my own opinion, right? Based on what I do. Because of the promotion, because of the news that was paid for, because of the hype, it didn't get the expectancy that it should have got. And because it didn't, I know it's gonna drop. Watch what I tell you. Like when it comes to that kind of stuff, I'm good at.
What do you think is gonna drop to?
About almost what it was originally supposed to start with. I think it'll go a little bit above, probably about between 82, 85 by the end of next week.
8285. Okay. No, I
So
was
it was
so
supposed to be when it started off, it was supposed to be estimated to jump at it was supposed to start at 78. Ooh, hey, yeah, right here.
And we making no sales while we on here.
So,
right. Don't do that. Not live.
You fired.
no, man, I
He
don't
said,
do no
"Woo."
crimes there. Man, my stock make too much money to be on the page where I do crime at all. Like everything I do is literally legal. I
All
really
right.
wanted to holler at this dude because his dad was selling a dentist business, and I actually wanted to invest into it.
Oh, cool.
Hey, how you doing? Good to see you, my brother. All right, all right.
He said,
Yeah,
Sound like Dennis.
yeah.
Mo, you
Hey,
funny.
how your
No,
people's
but
doing? I'm all right, man.
but
Yeah.
not
I'm
the
gonna mute right
VPN
here
that I
with
put in the
business.
back chat. Yeah,
yeah.
I was putting it in the back chat, and you guys spoke on it, or Sonny spoke on it a little bit, as far as digging into it. So what I do is I normally, look at some of the ETFs, and then I dig in which one is heavily weighted. And I
Yeah.
think for this one, I think it's CCI was one of them. I think another one was like a aerospace company. For this one, let's see.
Oh, that's what so the CCI was what Sonny was talking about. So you're trying to figure out where he came up with it, and you had it in the ETF.
No,
That's what
he had CMI.
CMI.
Yeah,
Okay.
this was basically off of the structure of the news that they came out with at the White House, as far as like the infrastructure on fiber and what they're gonna do with the fiber optic cables and stuff like that. So I just went all in on fiber. I typed in the number one fiber optics company, stuff like that. Then I started looking into some of the ETFs, and then I started breaking down some of those ETFs and see what was like the heaviest weighted stock within that ETF.
Mm-hmm.
And then Crown Castle is also within the part of the REIT structure too.
Nope.
So it's gonna double dose of basically just corporate and just corporate commercial housing could be a little bit of both in that perspective, because that's what you're doing. I mean, when you're dealing with fiber, you land that quote unquote that cabling for that of some kind of form of infrastructure, right? So, but CCI was definitely one of the ones we spoke about too, within that infrastructure bill, and they are one of the best in breeds in that space. Right? If you guys are familiar with that or not, they are one of the best in breeds in the fiber optic place. So kind of we spoke about with I think that with Vulcan for sand, gravel, and stone, and then there's new core, and it's some of them, but it's an expansive value within that, because again, that's not part of that. Matter of fact, I think we went over some of them with 13 best infrastructure stocks, American building, building spin, whatever, within that 1.2 aspect in that, and just using it as somewhat of a litmus to kind of pull back, because you can always go and find other parlayers in that space, second breed, third breed, whatever, but these were some of the top ones, before that. And then when they opened up, of course, a lot of them, they jumped up. A lot of them was on the top gainers list. Nucor definitely jumped up on the news, and many others did. Caterpillar, of course, Deere, they was running on the news. And keep in mind, United, and this was on the market that's been raggedy this week too. Now people fail to realize that market has kind of been all over the place, a little raggedy, and these stocks were still trying to move against that uphill pressure of the Dow, and the SP 500 and all that stuff, and the Nasdaq having pockets of weakness, right? And a lot of them were still trying to break out.
Well,
imagine if they had what they call a complementing market as well. Those would have been exorbitant better moves, even with some of them that they did get. But that's the nature of markets, right? Because you have to plan for all of that, right? Charge point, same way charge point was were bumping earlier. EVGO, right? EVGO was bumping, right? Many of them, and they just, again, they had to fight against that. And but see, that's the thing about it, because you don't say, well, they're not, they didn't run 500%, 100% like some of these crazy small caps be doing, but these are companies that are going to be, have access to a steady pipeline of potential money and contract value in the future, because they are, now getting that shine, right? And these are just the beginning. Like I said, these are just not, okay, this is a one and done process. That's not how this stuff works. They're going to continuously figure out ways to grow into that. And by way of that, get other contracts to upgrade people's scenario, whatever, nationwide. So these are what they call begin to be the starting point. So that's why, of course, I've been highly bullish on charge point for the longest. right? We talked about FCL, some of the others, plug, right? It's just the beginning, because these things you don't see a lot of these things on the road yet, or these these aspects of their scenario just really just highly being used right now, not to that level, right? Or Main Street is really excited about these household names, besides hearing about Apple and Google and all that. At some point, you're gonna have a lot of people starting to talk about what? Charge point. Why? Because a lot of people gonna start have to use their charging station, right? That becomes what adoption, right? Use case in terms of people buying electrical vehicles. Now you have to go charge said electrical vehicle if you're not doing it at home. Just like you go to Shell and BP and Sunoco and Exxon and all these gas stations that we now know by name brand alone, because we grew up with these names over the years, and it becomes like bread and butter now. That's how this stuff comes when you have new innovation. Like our children, they're gonna know about a charge point charging station or EVgo at the extent where they're gonna grow up with this stuff, right? So that's how innovation works. So you say to yourself in the same mindset, well, if that's the case, if these companies are able to kind of survive the test of time, they go Crown Castle, right? That's it. If they're able to sustain the test of time in terms of the innovative value, and we're moving towards a new engineering aspect of our economy or technology to make our use case in life easier, right? By these kind of things, right? Clean emissions, clean air, electrical vehicle. Then these are the type of investment we talk about what people had back in their days when, let's say, our great-great-grandparents were driving Ford back in the day, old school Model T or something like that, way back, or great-grandparents at least. So look what, today, right? It had its boom and bust cycles, but these things are just getting started. So that's that long-term perspective we talked about. That's 3-4 years, 5-year window, 10-year window. Let it work. Don't be afraid to look 10 years into your future. I know it's scary for a lot of people. Like, oh man, I don't want to think that far. That's close to death. I'm getting close to the casket. Man, stop. I want my class to get dropped. I want to have assets still out there working. That QSIP number still gonna be attached. Yeah, I put them in play. They still working. My future generations are eating off of it, or feeding off of it, or whatever.
Would you say they still collecting dividend?
Still collecting. Right? So that's the great part about this. So that's the part where I said earlier, we have to, not be selfish about our own, future value, right? We put a future valuation on our own lives, not by the standard or the measurement of other people or government or, a job or a college education. Those things are great. But here you control that. You get to control that. That's power. The same way they give these companies crazy valuations out the gate and they ain't sold like one item. Guess what? It's time for us to start doing that for us. Facts. Like I'm already saying, okay, yeah. So you should have about a $1 billion valuation on your head. You may not have a liquid asset value or liquid, cash or something like that. But you start building out your portfolio to rival that value of potential growth. Because in the future, that principal-based investment is going to increase. It's going the compound interest aspect of things is just scary when you start really thinking about it. So that's what we want to be in that position where we can look at that and like, okay, this thing just ran away. It got away from me. At some point, I just kept adding, kept building, kept growing. Man, now this thing way up here. I don't know. Look, that's a good problem to have. Right? That's a very good problem to have. So that's it. So we're moving under that perspective. Again, these are these current event moments. So we talked about peaked Fed indecision. So we don't know if Jerome Powell going to be given that chair again, right? That's what has markets a little scary too right now. I don't know if y'all know that or not, but like I said, Biden is interviewing other people for potential the federal chair position. When in a lot of people's mind, they already figured that Jerome Powell will be a shoe-in, right? He'll be, he would have no competition. But we talked about the reason why that is not the case now. Why? Because of what? All the stuff that was happening with those Fed governors with insider trading potential and things like that, right? So that's problem, right? Elizabeth Warren on his back and a few other people on his back right now. So that's not good, even though he got more people on that side backing him. But all you need is a few people who be able to detract against that. That could be problematic. And I think she sits on the Banking Finance Committee, if I'm not mistaken, Elizabeth Warren, Senator Elizabeth Warren. So yeah, that's problematic, right? And then with that whole issue behind those guys, probably insider trading, the ideal of inflation, doubling down on the transitory thing. It's not transitory because people always take that stuff to the polls with them when they start voting, right? Because they just remember, like, man, you were the people who were tied to this moment in my life that was miserable. See, that's the part of the polls that people don't want to deal with, right? They be one side, two side, and it's still the same buzzer, right? Right wing, left wing, still same buzzer in the middle, but still, they still, that's how they roll, right? We're trying to be in a position where none of that stuff really, really can really adversely affect us. You know what I'm saying? That's what you figured out, how to, grow you some income, grow you some money in a way, or at least have access to be able to do so where parties don't even matter. Right. To the extent, where at least you can feed yourself, clothe yourself, shelter yourself. Right. So that's it. So just putting that in the consumption. So that's another part of things that war on the market today, right? It's been wearing on the market literally all week. And then, a lot of this stuff that, the Evergrande, we talked about it a little bit earlier, they defaulted. That's again over $300 billion. And that could unravel a lot of other players in the space too. Right. And then again, peak indicators is not rocket science. We understand that some of these aspects and these assets and these readouts that you're starting to get are indicators, are not necessarily just moving averages. It's also CPI data. It's inflation. Individual aspects of inflation that's throughout the commodity markets that are also causing problems too. Right, it's margin value. Right, we're sitting. They say right now America's are sitting in margin at the tune that they haven't seen. Like I think this is even a comparative analysis to that. How many people have borrowed money in the markets right now? Because they are solely confident about this whole body dip euphoria that has happened with the Feds. Everybody's overly leveraged. That's why people are able to make a ton of money. Being overly leveraged in moments, using margin because the market just seems to kind of chug along. Any kind of bad press, it just shrugs it off and just keeps and grinds higher, or at least at the value where it's just not dropping and falling and correcting and filling out these air pockets and gaps in the market to the tune where it seems to be logically healthy, not just drop, but just kind of moving that way where people can telegraph the move. So that's why the Fed's been very easy with their words. They're going to make sure they give everybody this soft landing that they're trying to orchestrate. Whether it's going to happen or not, I don't know. But there are a lot of black swan events still out there that they yet to account for. Evergrande was definitely one that they kept trying to sweep it on the rug, but they just cannot. That's a lot of money because it's tied to a lot of people around the world, players-wise, that's in it. So that's another, driving force on the markets today. And so that's just how you look at it. So synopsis of the market synopsis is just that, right? A brief survey value of what we're looking at as a whole. We got the infrastructure bill, and they're planning for what? What's the next bill that they're planning for? Anybody? What's the next bill that they're planning for? Or the next major catalyst for the markets, I should say, even though that's weird. But what is the next major catalyst?
The Build Better Back plan or something like that.
Is it say again? I got a couple answers there. What was that?
The Build Better Back plan. Or
okay.
Something.
Yeah.
Whatever that means.
Human infrastructure.
Right. That's what we got right now, right? So we got the infrastructure bill right now, right? We got that one passed, right? So we just put the IB, right? We know that's infrastructure bill. We got that passed, right? 1.2 trillion.
I may be getting some dollars from that one.
That's nice. See, again, it's a lot of stuff in there.
Yeah, we got one of my board members is connected with Biden, so we may be getting some housing money.
Yeah, let them cut that check.
Yeah, we was waiting for that one to pass. I was waiting for that one to pass. Give me a couple zeros.
Yeah, let them cut that check because everybody else gonna get it. We don't find a way to
Yeah.
get it.
You better, hey, listen, better say that. My board member, man, she a bulldog. She called down there. She was like, hey, we tired of these pennies. If y'all don't give me some real money, I'm about to cut up real bad. She was not playing
Yeah.
too. She's one of them. She's one of
Hey
them.
Mo, can I ask you something real quick?
Yeah, go ahead.
You know how we had to talk 2 weeks ago about the Cash App and doing and getting a tax rebate on it, right?
Yeah. 1099s from the business cash. That's anything over $600
from the business.
Is the bit from what I read was those who have the Cash App and the business Cash Apps that get more than $600 that they're the ones we getting the 1099s. The same thing as Square and PayPal and all that extra. Yeah.
So basically, you have to use a business Cash App in order to get the tax rebate. I mean refund.
No, it's not a refund. It's not a rebate or refund. The 1099 is counting as income, business income. That's saying that you accumulated revenue in your business. Somebody paid, so you collected more than $600. Well, like anything, if somebody pay you more than $600, they're supposed to issue you a 1099. So they just kind of catching up with Cash App. That's all.
Because as far as my clothing business, I didn't do nothing with it last year as much as I should have, but I used it for the tax. And then for this year, I just basically barely started doing my cooking business a couple of months ago. So I was going to try to include that with the Cash App.
Yeah, well, the benefit of owning a home-based business is the tax deduction that you can gain if you're doing the itemized deductions. But yeah, that's another show.
Yeah, we'll build on it.
I'm getting.
Matter of fact, like I say,
Can I get a write off? Okay, we have an idea.
I don't want to get too deep in that open Sunday because I want to cut off at a certain. That's why I say I want to get one of them where we can itemize it because that'd be a complete focus, focus conversation.
Yeah. Okay.
You know what I'm saying?
We'll get back to that.
That's going to be very helpful to a lot of people.
Yeah, because I wanted to get into the business part because I'm making enough money now where I'm just basically trying to invest because I don't want to mess up my money. I don't want to be a stock all-star where I'm just wearing gold chains and shit like that. I'm trying to do other stuff. So
I mean, you're doing what what's feasible for you, for your future, and then you realizing the power of other avenues that you can now, that you're now embarking on course that expands your financial literacy. Essentially, that's all we're doing. We're trying to figure out how to turn make $1 out of 15 cents, but not just turn it into $1. How we can have what they call staying power with money, right? Have access to the wealth that's created outside of you having to sit there and monitor and will it all the time, right? Mm-hmm. That's what asset ownership gives you, of course, in this case, outside of house equity values like that, or just own the business, which is a more of a tangible perspective, because you got to be there for inventory, this, that, and the third. Unless you got a service-based business, you still got to be hands-on. Here, it's more so just watching the assets, monitoring, keeping up with what's going on far as cycles in market cyclical values, and let the stock do the work, right? You just check in when necessary, monitor it. Sometimes you can stop loss, sometimes you just let it roll. That's a part where that's the next level, I think, in our evolution, meaning Black economics. I just use that as a case study again, whether it be, because it's anybody, again, there's no race, color, creed, sex, gender, orientation when it comes to this, but especially on our side, because we are somewhat still late to the party in a lot of ways with this. That's a part of our black economic, evolution and revolution in its space, because we're trying to overcome the fear to do just like what you're saying, right? How to, figure out how to, be entrepreneur minded and other things, but also diversify what our value now by other income producing assets and stocks, and be it you do a little crypto, whatever, right? But you're using the global markets is my point as a tool, right? Because if you just bought $1,000 today worth of Apple, what's the chances of Apple going sideways or down for the next 10 years? Like on a plausible scale, they don't seem to be plausible because you feel yourself, okay, well, Apple's a top branding company. They've been around this long and they're just starting to really trying to show, a lot of expansive growth. So if nothing else, you would politic that I should at least get a minimum of what, 30, 40, 50% over 10 years in Apple, right? And Apple can easily give you that in a year, right? So it's that kind of mindset. If you plan that out on a least common denominator perspective, a least value, least path of resistance, and you supersede that or exceed that, see, that's the part that makes this stuff great. Because again, you're still whooping that money market account. That's your bank. They can't pay you in interest what you can get out of the market, right? You beating any other aspect of feeling like, if I go sit on somebody's clock for 8 hours a day, they're only going to pay me, $20 an hour per se, which is still actionable money. But if you could be using that time more wise to get a bigger bang for your buck, then so be it. Or the goal is to figure out how to do both, right? If you're going to do something like that level, you can use that capital to fund what projects you got in your life, like you saying, right? So that's what's great about this stuff. I love it because you have access. That's the key word, access, right? Access.
So since it's about to be almost the end of the year, this is the time of the year to talk about. Remember last year talking about tax harvesting around this time.
Yep. Tax loss harvesting. You got that coming. This is odd because we up against this whole new tax bill. We don't know how this thing gonna go. It's still in the air. It doesn't really supposed to affect a lot of us unless it affects a lot of us. Of course, they talk about 400,000. Now this top 1% that can go either way, right? That's what the whole thing got Elon in flux right now, right? Right?
Yeah.
They try to tax people on unrealized gain. That's just unfathomable. But however they're gonna do this to pay for this thing, that's what makes this thing unpopular. This whole, that's why they spliced the bill and they weren't gonna do a vote on both. They knew what they was doing when they was doing that because they needed to win for Biden, regardless, because he's taking L. They rushed it, right? And regardless, however they do it, they trying to go after the crypto market. We know that they're gonna try to tax crypto to get some of this to pay for some of this bill, right? So, but the tax loss harvesting is universal because that's just base case, RSS when it comes to asset ownership, the capital gain tax, right? And so you harvest before the end. If you want to take those, if you can write it off, you want to go ahead and harvest those losses, so you can do it. Now, of course, if you LLC, S corp, C corp, any of those entity values, you can write off a heck of a lot more. If you self-proprietor, just what they call a retail trader, then by RS law, if you don't have more than $25,000 in your investment account, you get to write off a minimum of $3,000 every year. Now, even if you have a loss, over $3,000, you only get to write up to $3,000 that particular fiscal calendar year. Now, you can still take the following year and write off the additional. You can add it to your other, tax write-offs in that perspective, right? So even in that, look at that crypto investments, even helping people out that maybe took some L, right? You get to write that, at least $3,000 off. In base case, but if you got 25,000 in there or LLC scenario, then you can write as much as you have in terms of how that lost value. All right, so that's what tax loss harvesting. And we'll go in more to detail about it, like you say, right? So tomorrow, this is the time of year where we can have that conversation. Got another month before that becomes relevant. So, and like I say, it's weird now because we're up against this new tax scenario. Potential, however, they're gonna do this with this Build Back Better.
Oh God.
If they gonna say again.
I'm just reading it now. That 23%, 2023, that's sales tax rate. They want to, I better read this thing.
Yeah, they're trying to audit because right now we're just, we were dealing with, tax. Granted, people say what they want about Trump, but Trump, he had lowered it, the capital gain scenario, and, it was just more conducive for people to have asset ownership. That's why most people saw piling the stock, obviously, right? Right? Even if you were day trade, you had a better rate, So if they tell me trying to do all this dumb stuff about unreal, now that's the point part I would definitely push back against. But again, at the end of the day, for the most part, for retail traders, how many people them sitting around and 400,000 liquid and assets. Some made a lot of that stuff under because of GameStop and all that, right? They unlike the wealthy people who got surplus that, but strategically, that's the whole purpose why now you start to play the game the right way. You Roth that stuff. You Roth that stuff. You Roth that stuff. Your bigger investments, and I shouldn't be saying it this way, but I'm gonna say it. Your bigger investments should be in that Roth. Hint, wink, wink. All right. So if you got those accounts out there, you start to build on the Roth, start shifting a little bit. If you can.
I still move mine over.
Yeah, get them contribution points. You know what I'm saying? Because that's how a lot of these dividend players out there ball too. Stuff coming off the back of them Roth, they just load it up because they're gonna sit on them for a while anyway. They just want to collect that royalty, and they just let it ride. You see what I'm saying? Let that Roth work the way it's supposed to, like a 401k. Right?
Yeah. Once you get the thrill of making it and having it, then you put it over there and just watch it grow. So that's the phase I went through. Like I'm excited, and I was like, okay, I need to figure out where to put this.
Yeah, that's we know we've been training on this for long. Income shift and diversification. We get it now. Man, I said the sky ain't even the limit. The sky's the beginning with this because there ain't no cap. Right?
Yeah.
Ain't no cap on this. As they say, no cap, right? No cap, ain't no cap, right? No cap.
No cap.
No cap. No stealing and no lie.
Yeah. So someone here, they was like, yo, what's up with the new tax? They were saying this is talking about but small business owners making a certain six figure so I don't know. They just was going on and on and on. I'm like, okay, slow your roll, because I haven't read the bill. Went over my head.
Well, still got to get through, right? Because again, we coming up on the only thing that's in infrastructure. That social spending bill is where all that's supposed to be at. That's where the tax stuff at.
Yeah,
that's why the Republicans firewalling it, and they stalling it out because they want to get out the rest of this year with all them paper gains and be safe. Or they'll deal with that on the back end next year after tax laws harvesting out the way. These people slick. They ain't slick though, right? we know what they're doing. Right? These are people who still held over from that Trump tax era, but they want to be able to benefit out that, right? And they don't want to be punished for holding, for stocks going up, which obviously was what induced by the Federal Reserve, which is also, giving Biden the black eye now because of the inflation, right? So you can't have it both ways, one way or the other.
Yep, I'll get you.
To be honest, right? Giving a curse, but for us, for the most part, again, if they tell about this whole 400,000 scenario, if you know how to play the game, you'll be all right. Diversification, stress them things. Go ahead.
No, I'm about to say these people about to be sick. They tax that Social Security.
Yeah.
So that mandatory tax on that Social Security, they just double taxing people all kinds of ways. They don't care. They just gonna get you.
So see, that's what makes this stuff crazy, because if you don't own assets, then he's like, well, that don't bother me. Well, it does affect you too. Because you've been priced out of the opportunity still. You can hit. Right? You can hit. You got no other streams of income. You just basing upon how governments, will a Keynesian swore. Right? Yeah, I know we went over this many times. Austrian school of law and the Keynesian school of law. With government controlling, free markets, that's problematic for you, the individual. You can't really expand and wealth if they putting a clamp on stuff.
You ain't got no voice.
Say again?
You don't have no voice there.
Yeah, you don't. That's tragic.
You don't even understand the lingo of what they talking about. You want, it's a whole nother ball game.
Yeah, that's problematic.
I was listening to a podcast the other night and it was talking. Man, I just wanted to. I was like, oh my God, I need to be on this panel because y'all gonna mess around and get left behind. Y'all about to get left behind because y'all speaking the rhetoric side of it. You need to be speaking the detail side of it and how you could actually, instead of worried about what they're doing, you should be like, okay, how you said it, follow the money. Okay,
I got money.
move with it. Because trust me, there's a loop, not necessarily a loophole, but there's a way for you in there. You just have to know what they're talking about and say, okay, how am I gonna move with this? And like you just mentioned, your high portion of your dollars should be in your IRA. So if that means you need to be tuned into the people who talking about, okay, how to protect your dollars. That Elon Musk, when you was posting that post on Elon Musk, in reference to him, doing the poll and selling of the stock or whatnot. And I bet a whole bunch of other people panic and go in and do stuff with theirs, but Elon could cover his tax bill. And he's he sold, but they didn't say he withdrew. You gonna go sell and withdraw yours, and you look again, your little buck will be in trouble.
Right.
Taxes.
And speaking on it, he sold like a billion tonight. You know, see, he got up to 25 billion. He only sold $1 billion tonight. That's to kind of calm the bleed a little bit in the stock because they're coming down. But that's a win for people who feel like they're holding the stock. But they still got 24 more billion to go.
Yeah. Mm-hmm.
But that's it. He could do that. Like you said.
Yeah. He said it in one of the posts that he avoid taxes because he leave his money in the assets. So just because he didn't mean he withdrew it. So all of them gonna probably jump on the bandwagon and get to sell it, and then you look again, they're gonna be looking crazy.
Yep. Just because he sell it don't mean he withdrew. You 100% right. It's still sitting there ready to rock. And so of course these people smart. Wait,
you mean within the actual portfolio, right?
Yeah,
right.
Like the funds, right? Yeah. Instead of just getting rid of the actual asset, he just leaves the funds in the actual portfolio, then and reinvest them into another. Okay.
Right. That's what I think he did. But
he's still open. Like I said, tonight, I don't know if y'all saw, just tonight he sold $1 billion worth. It just came out this evening after hours. Right. But it was only $1 billion, right? Of course, in this case, the ideal of the 10% was still around 25 billion, right? And that he had to sell kind of cover his taxes. His taxes is I think around 15 billion, apparently, quote unquote, somewhere around there. 15, 20 billion, somewhere around there. But anyway,
he did.
But yeah, he got stock options that he had, that was coming up for maturity anyway. So that was just a way to cover that. But he's doing that because again, this whole ideal of he wanted to show them that just taxing people for that reason, meaning the government. This is him trying to call them out. Like y'all just kind of recklessly throwing tax policies around to people to try to fund this. Not so, I guess, put together, plan you have here. It's not really thought all the way through, but maybe that's the pushback with people when they got billions of dollars, right? Because you follow the law based upon how it's written and directed. You stress it when you can, stress test whatever the same way. But that has always been the American way. That's what's so funny, how these people just act like I was always built on that. It was always built on protecting the wealthy people, right? And their assets as much as possible. The more they sit there and try to play this game about they want everybody to play their fair share, you wouldn't have such tax loopholes and implications out there if that wasn't the case. Right? But they know people will push back heavy, and it'll get messy. Anyway, that's just America. Right? But the good part about it, again, now that you have the ability to grow money through these avenues, you can fight this game a little bit more better now, or at least from a place where you got a little bit more power, right? Because that's a good problem to have, right? That's a good problem to have in terms of capital gains, right? The idea of capital gains tax, period, is a good problem. I mean, if you make $100,000 and they hit you with 28%, right, or down to 21% as now before you change it, right? If you do it on a per annum. Again, that's what 790,000. You still walk away with. What I said? Million, not a million, but 100,000, right? What I said? I forgot. But 79,000, right? If it's 100,000, right? That's still 79,000, right? You ain't work hard for that. The stock did work hard. You gotta. You're like, oh man, I hate to give you $21,000. Like, bruh. Okay. So you got $100,000 worth of damage on your body, and that's a different perspective, right? But that's why people who only work hard cry the most about taxes, rightfully so in a lot of ways, because they, you know, but they feel it. They feel their taxes. Think about it. They feel them taxes because they already trying to put two and two together to stay above water, right? Yeah. So, man, look, my opinion, I just think we need to be focused on, you know, definitely increasing our knowledge when it comes to asset ownership, house, stock, whatever. You got to get in the business of appreciating assets. So where's that? All right. So
You
that's
say
it. So
focus
guys,
on AO.
that's it. Asset ownership. That's the new T-shirt, right? we finding one, right? You get the AO in your life, right? What your AO hit like? Right? Like, what you mean your AO hit like? Well, look at them young folks ain't ready for it. You gonna cut an album on that? We gonna cut an album, boy. Jiggle like, what that AO hit like? AO, right? Yeah, Jiggle saying.
Got two new shirts to make me.
You see what I'm saying? Jokers ain't even ready for it. Let's go. So, you know, that's where we're at in that. And again, markets are, you know, they're fighting that uphill battle, you know, and you know, they are still in an uptrend in a lot of ways. You know, we got the 10-year yield, as you see here. 10-year yield just is rocketed today, right? Rocketed. That's the peak indication I was talking about. When I was talking about peak indicators on the back end of you know, tonight's topic. Well, we saw a lot of people around the world dumping bonds. I think I posted in the group today that chart or that, you know, perspective on the global markets in the different nations, their bonds, how they were shooting up. Everybody was dumping bonds around the world simultaneously all together. Couldn't make this stuff up. It was a long time since we've seen something like that happen. What triggered that? They were selling bonds in France and in Japan. They were selling bonds everywhere. Europe, all American market. Of course, we went up 8% today. We bounced from 1.43 on a 10-year and went all the way to about 1.58, 1.59 intraday. The last time 10-year had a bounce like that was like forget about it. Right, look at this. You couldn't make this stuff up. So that means these are what they call organic gauges or organic indicators, right? No matter how much the Fed may try to manipulate these by trying to subdue them through reverse repo operations and just buying them through this, you know, these Fed mandates, these are still more organic rated indicators. They're trying to read in what the true value of what GDP and inflation and all, it's reading all those base case data points, and it's operating under that mandate in terms of debt, backing debt, you know, credit cards. So yeah, they trying to subdue it, but this thing trying to come up out that closet. It's like a raging, like you lock them in the closet. You trying to come up out that closet. Yeah, that was a massive move today. Massive move today. You know, so again, I'm just saying, yeah, I mean, you can see it even from here. Just that move alone was just massive. It bottomed out around 4.3 and just rocket right away back up to a point of resistance up near this point here before it kind of pulled back, you know, about a week ago plus. You know, so yeah, that means, you know, they only got too much longer where they can try to keep yields, you know, from breaking out, you know, in terms of that, you know, the 10, the 2, or the 2 and the 10, and 30 definitely, though, the 20, even the 20, obviously TLT them. But that's signaling that, okay, yeah, we need a rate hike before it's over with, because this is getting out of hand. And it's healthy because markets need to have that value where they have to account for all this debt, this surplus of debt that's running onto the Fed's balance sheet that's going to be paid forward to the future generation. Because again, like I said, these here and the now boomers are greedy. They are greedy. They're greedy. Right. So we prepared. So that's it, guys. So I'm ending on that note for a little bit, because I know, you know, I love this stuff. I keep going, but you know, I want to save a little bit of energy. Hope you guys benefited from it on the back end, on the tube side as well.
Of course we did. Of course.
Appreciate you guys a million, man, because I tell you, it ain't easy what we do. Like I keep saying, I know for us, we like it because it comes natural and easy for us, because we learning to earn essentially. But shout out to everybody who's trying to shape at least a positive narrative around financial literacy, because that's the base case in this, right? I would say so. Its base case is financial literacy. You can take this out at that point and run with it, right? If you want to own houses or run a business or sow your oats and entrepreneur endeavors, but base case is financial literacy. That's what we're excited about, right? So,
Hey, Oba, before you go, I did have some questions for you though.
Asset. Can you hear
No,
me?
it was
Hello?
about SPY.
You breaking up? Oh, you breaking up. You going in and
I
out.
said it
Go
was
ahead. Say
about
that again. Now.
SPY. Can you hear me?
Yeah, it's going in and out. I think you said something about spy.
Yeah, I was saying about SPY.
Yeah, it's breaking up over. Every time you get ready to say it, right before you said it, go out.
My bad. It's my Wi-Fi. I was saying about SPY though.
No, go ahead. What were you saying? I would say go and get it out, because if it go in and out, I can hear it, at least get the question or the statement.
Did you get to look at the trajectory I put up on the page?
Oh, what in the group?
Yeah.
Yeah, you going in and out. If you are speaking, we can't hear you.
Yeah, I was
Okay.
saying the trajectory that I put in the group.
When did you post it? I'm sorry. I may have and just.
I had posted it this morning. It was right after I had made the trade for SPY, and then after I made the trade for SPY, I had put it up on the page because I have it estimated to 482 by it's 482.30 by December.
By December,
The
month of December. Okay. All right. So
end of
yeah, I'll
December.
analyze it and I'll get with you. Cause there's those things where I'd like, yeah, I got you. Right. You know what I'm saying? So I'll look at it. And of course, like I said, when we talk about little stuff on here like that too in the same breath, I think you mentioned it earlier. I was already kind of put where you at in that perspective, and just using the linear regression band as in itself, right? This is just one of the base things that I use in terms of just indication. Left to its own devices. When we say markets are left to their own devices, they kind of trend into opportunity or trend into strength based upon the rules of engagement, which tells everybody to kind of stay stay risk on, but with some caution, right? That's a part of what looking at the markets and assessing it, far as planning for what
Yes, I can do it.
opportunity, of course, in the markets. In this
You
case, like
just
if you want to
dropping
put
the
in your
money or
money,
what?
especially if you're option
Or
trader.
you counting the register?
Oh, my bad. Okay, Chris, you open. I got him. Because he's handling business. Sound like he over there handling that business. Put him on mute. All right. So yeah, so that'll kind of give you that assessment. So yeah, I'll look, dig obviously more into it too, and just look at it, even though I could tell you just based upon on a blanket perspective here that markets definitely have more than the ability to to hit such a level. Keep in mind, we just went up from 426 to 470, over 50 basis points, dang near 50 basis points in a matter of how long? A
I would
couple weeks to a
I
month.
didn't look at it on a percentage basis, but I was looking at it as far as how much it had made as far as growth per week. And so within the last 2 weeks, it jumped from actually a $20 markup. And then even before that, it within the last month and a half, altogether it jumped to I think a $36 markup.
Yeah,
Because
it's like I said, near 50. Actually, 'cause you can see it on my chart right here. Okay, It was that low we had with the last pullback, and we hit 420, basically 426, right? And we went shot all the way to 470. Again, that's almost 50 points, right? Keep in mind, this on the daily chart too. So that's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 1, 2, 3, 4, 25. So basically 25 days. So we say a month, of course, granted. That's 25 days. The market's up dang near 50 points. And people like, well, on what? On what news, right? It's risk on when people feel like the Fed reveals their hand, they got something to work around now because markets love to climb the wall of worry. And you're going into a holiday cycle. And they try to rest a lot of that optimism on what? On earnings, because that's what people always look for. That Q3 earnings is always a big litmus test going into the holiday shopping holiday shopping season to be a litmus for driving markets higher, right? October is supposed to be sometimes ambiguous month for markets, right? Even though our October was different. This October here was actually bullish, right? It bucked the October effect and just ran on the anticipation that the Feds were still going to stay accommodative to the degree where they weren't going to close the entire kitchen down altogether with their bond purchases. So we kind of already knew that, but they still needed to hear it personally out of their mandate because it goes on paper once they say something like that. So you just reducing by 15 billion, which we knew obviously in the month of October, gave Wall Street the green light to say, okay, it's still risk on then. We still have some companies out there still putting out some good earnings, despite supply chain issues, this, that, and third. They're going to guide lower, but like markets, what they always try to do, right? They're going to try to price it in. That's their whole modus operandi. If they can find a way to skews it in, so be it. Algos don't care once they're being programmed to buy certain aspects or levels of markets, to play into certain buzz keywords that's coming out through, financial press releases and certain talking heads that get weighted value in markets. So yeah, like we said earlier, it still goes back to Tina, right? Meaning there is no other alternatives out there. So markets can easily, regardless of what's going on, because there are some problems that still waiting on the market. The markets are under a lot of fundamental pressure, but the market's not trading on that now. I do expect at some point all that euphoria is going to come to a head. Now, be it in the black swan events that's catastrophic to a lot of people who overly leverage, that can happen, like COVID. Or it could be more, they're going to walk the market down. And that's what they're trying to do. They're trying to make the markets go into a soft landing with the winding down of the Feds with this bond purse. So even if you play the game of the markets using, a more subtle approach going into the end of the year, right? But you typically have a Christmas rally, of course, the month of December. We were right up on that. You got obviously Thanksgiving coming up. It's already the 10th of November now, right? It's crazy. Markets are moving, right? The months are moving. So if the market just played this game back down to 20 moving average, bounced, pinged around, it even came down. Let's say if it came down and test the bottom here at 440 something, right? Whatever, right? The market again still would be in a higher low perspective. That means it's still in a uptrend, right? And algos are still programmed to realize that, and fund managers are trained to realize that too. You buy those lower, risk performance areas or pivot points in markets or trough moments, and let the retail come behind, because they know they got an army of retail behind them that's by the armies that's going to move right within that context. Again, unless you got something to really shake people out the market, their fear, then they're going to continue to stay that course. So base case, if you even drop back down to the baseline here, about 440-ish, I say about 440, but I'm sure it's right around about 445, right? Should, yeah. That still puts you in a good scenario where, again, if you rocket it up 40 points, name 50 points on this move, and that was a whole lot of this anticipation news. Here at 445 to go to 480, that's 40, about the same difference, right? It's still about the same thing, about 40 points, right? This did it in 25 days, right here, 25 days, right? On just melting to the upside, right? 40 plus points. We'll just put 40 plus, right? Points. Here, even at a higher low, right? Which uptrend is intact. If it came down and tested that part, that still gives you until that's end of November until roughly the end of December, let's say per se, right? That puts you at around a point here, right? That's roughly around a little shy of 480 or right near 480, or easy can exceed that. By the end, the end of the year, that puts you roughly here, right? Right around about 480. I think I already mapped it out. I did this a while back too. About 42. So
No,
right around your
it
number.
it is because
Yeah,
my January was at 482.30, and I messed up. It was a little bit under that. Should have been 470. Yeah, 478.
right. So you can play a window within that. And that's one thing I love about channels too, because channels give you perspective. Like I always say, draw your channels, split it down the middle, play your plus minus into that. You'll always have a good range you can trade or even map opportunity into, right? So that's a part of being really good technical. And then the fundamental stories behind it, again, like I said, Christmas rally, people always get excited around the holiday season. They spend money in markets. Most people who are not at work, they get a chance to invest because they home for holidays. That even though COVID didn't dismantle that, people just home anyway. Or for most people who just been comfortable working in COVID, they already know how this works. But you typically always have a bullish stance, particularly try to get that going to the end of the year. But even though we under some different abnormal circumstances because of everything that's happening now, you do have to factor in that risk too. But just be cautious to understand that hey, these are my obstacles, right? If there's
Can you take that back to 2019 at this time?
right.
I just want to see something so I could be able to tell you something that I want to talk about.
Well, again, like I said, let's save a good part of that for another, because I gotta get some dinner. I'm sorry. I know you're on the West
Yeah,
Coast, but it's
yeah.
10:45 here, and I
No,
started
no,
at
because I was
6.
just gonna say as far as the like following
Yeah,
trends, right?
yeah,
And
uptrend. That's what we said in the
as
very
far as
beginning. And now you were on it, of
yeah,
course,
as
but
far as what kind of company
yeah,
is, it would take a episode of a horrible breakdown for it to drop that trend. And that's the difference from using the ETF from regular stock.
right. Again, because of the collection. Now that's totally right. ETFs give you more. Again, it gives you more push and pull value than just one entity having what sensitivity to what issues far as not being able to meet certain project dates or FDA
Lawsuits,
laws.
not being able to meet product and production,
Yeah, so
not enough people that's really into your marketing.
but it's a plethora, right? But again, markets are very funny and sensitive about certain things and others when it shouldn't be. So that's the part that also when markets get disconnected from reality, you have companies that beat on EPS revenue and guide in line or bigger, and they'll still drop. Why? Because at that point, if the markets are in a risk-off perspective for stocks that are overbought for some other reason, but Algo might be searching for that, they'll sell the stock off. And fund managers have no problem with that because they'll say, okay, well, guess what? We wrote this stock from here to here, and let it get cheaper again. And they'll just wash, rinse, repeat. Case in point, real quick, and this is the last one I got because I got to go online. I got to go now. Right.
Oh, I gotta tell y'all
Right.
too. If I
Let me show y'all this.
ever when we do have these talks, if I talk too
No,
much,
this is training.
you
This
gotta
is
let
part
me
of
know
training.
because
So
I don't have these talks with everybody in the real natural world, so it's
no,
kind of
it's all right.
hard. So if I do talk too much,
You're
just
all
let
right.
me
This is
know.
training. This is what we do. But again, I at least try to have a structure because I got to be conscious of everybody else's time too. But even though, I don't know. I don't mind. This time you get to go hard. It just I'm on the back of wind down a little bit because I got to get out of here myself. But anything that I can't give here during the training, I'll try to backtrack and come behind if you ask the question, right? Or we'll backtrack it on again. But just in that case, just using that what you just said too, and also reiterating the fact that when you do have stocks who gain exorbitant values out of nowhere, and they still have a good growth story intact, but they still being richly valued up against what the broader market is signaling for, they'll get searched out by algos, hedge funds, whatever. Does not negate the growth story, just that you still a richly premium stock. Again, Upstart's one of those ones, right? It IPO'd last year, December, at $23 a share. This stock went all the way up to near $400 in under a year, from 23 to 400. It's this kind of stuff. And people like, man, the stock stuff, man, investment stuff. But this thing went from 23 to 400 in under a year. Somebody do the calculation of those returns. Yeah, right. That's crazy. That's what is that? That just hypothetically, what 5,000% return? Some crazy number like that, dang there.
Yeah.
4 to 5,000% return in less than a year. So this is why I'm like, okay, all right. So yeah, it fell out of grace today because it had earnings, right? It's because it was just rich. They numbers wasn't that bad, but they were just rich premium. For PE through the roof. So yeah, I'm like, okay, and they got some air pockets, right? Gaps way down here, right? And kind of how Moderna was. Moderna was way up there, $500 a share. It hit some air pockets, right? Finally, but they found some news to kind of pull it back some. That's fine, Hedge funds need to have a way to wash, rinse, repeat their money too, and they like these little assets like this. The ideal of what they can bring. So, you're 100% right over in that regard too. Just these assets, ETFs obviously that as opposed to individual sensitivity of stocks do matter, but at the same time, again, those who are in at early points, they know how to recognize that. And those who are coming in late need to also realize the value of what the risk involved. So you tread lightly when you see a stock that went from that much to that time span and ask yourself, what's the probability of it just ramping any higher at that point? You really have to have a really good base case of some kind of fundamental story or projects or something. If not, realize that, okay, just find something else out there or let it come down. And then you take that patient route, right? And try to, get into the growth story that's already kind of presented, but right now it's just rich, right? So, yeah, I'm definitely looking for Upstart to come back down. At least if we can get it down to 200 moving average, I'd be fine with that. But we got an air pocket down at 139. If it come that low, I'd really love that, because these little stocks like this have great opportunity to go back up just as fast. Why? Because they've shown that, right, that they can go up that fast with the level of story that Wall Street got behind in the first place. Beyond the euphoria of markets being bought by Feds too, you still have to say to yourself, man, this company has a decent model, right? It's working, right? And the same can be said when it was Beyond Meat. Beyond Meat had that story when it first IPO. I was all over Beyond Meat before it came out. That's my lifestyle, right? So I was like, yeah, we on it. So it came out at 45. We was on it. It ran all the way up, near 240, right? 250, pulled all the way back down, right? Ramped back up again, went back up to like 192, and now it's pulling back down. So they had earnings tonight, right? They so-called missed on earnings. It came down, it was dropped to like $76 here after hour, right? So, and it's still showing downtrend. So yeah, let it come down, right? Growth story is still up in the air. If they can get that McDonald's contract to be the wholesaler of this plant-based food, they still trying to get it, right? But that's a lot of McDonald's. That's why they fighting so hard, putting all their eggs in basket for that one. I don't get it, but maybe for them they get it, right? But if they get it, they get every McDonald's if they can make that happen. I would say they need to be focused on other stuff too, which they are, but not at the level they need to. But let it get cheaper, because at some point, those plant-based companies like that still have a long way to go, right? So I'm just using these quick little case studies in passing here, right? But that's how you think about that stuff, right? It's exactly how you think about it, and how you parlay it in your head, politic it in your head. And so when you look at, ETLs and SPX and SPY and the subsectors in the spiders and, XLP, XLY, XLK, and, all these different little things like that, or just infrastructure plays like PAVE, that's all you're doing. You're just measuring it up against its competitive value and what the markets are signaling in terms of industry rotation, right? If we're in the value play of growth stocks, or we just strictly on the momentum side of things, right? And what's the use case going forward in terms of evaluating probability of success in markets, right? So yeah, not far-fetched to see markets at 180 by the end of the year. Excuse me, 480. If not something nutty like 500. These people are so crazy, right? But again, you still got to be able to assess the risk, right? Don't just jump out. They say, don't just jump out the window, right? Well, no, but it's all love. So no problem, guys, at all. This is great. Now, this is what we do. And so yeah, we'll build on it some more. So just I hope that helped a little bit over Sunday, but we're gonna build on it more. I just got to get out. I'm on the back end of the day of the session now, and I got
No,
a
I
couple things to
definitely
do.
did. It definitely did.
So we next time I go live, we touch on like we always do. But we always didn't touch on it before and kind of go over it. It just like Sister Monica said, repetition becomes repertoire. You got to continuously keep going over it, keep reassessing. Sometimes it's necessary, and look at it because it costs nothing to do it. Right, looking at charts, it don't cost you nothing really, but some time. Right, that's all it does, and it's worth it. All right, so that's it. So with that being said, guys, I hope this was great. I tried to do a little bit of tying of the both, right? Add a little bit of the crypto world to it in the very beginning to kind of show you that symbiotic value, how this stuff is working out on that side. Because even though crypto fell out the bed today, right, a little bit, it pulled back, from that 66,000, 67,000 area and pulled back down towards 64,000. And jokers got like crazy nervous, right? And it's like, oh, what's this about, right? But we kind of know what it's about, right? And we're just, raging up and hitting some overbought levels, and it came down and kind of trying to consolidate. These are healthy moments, right? Healthy moments in crypto, right? So don't run from it. Just understand it and, trade in around it. So the same can be said for the altcoins and many of the ones who have great use cases that could be very useful, right? Just make sure we're aware of that, and we trade them or invest in them thoroughly under that perspective, right? And so I'll do that. Matter of fact, if I get lucky a little bit, I keep saying that, but next time I have a live session, I'll touch on some more of those altcoins or the perspective of that correlation with Bitcoin, how they run, typically ahead of it or after Bitcoin make a big run, and which ones are probably great for opportunities to link to that of the equity markets, because now you're starting to get that linkage with the metaverse conversation and all this other stuff. ERC20 is starting to become really good. Now they got ERC 1158 contracts out there now. The Ethereum protocol is growing. I'm loving it, right? Because I've been an Ethereum person for the longest, and I love it because those smart contracts gives banks, fintech, and everybody else comfort and wanted to be in the blockchain space because of that, immutable ledger and the fact that this value of technology and speed and efficiency that it comes with in that value of being able to do those digitized contracts is a lot better than the old way that equity market's been doing. That's why they won't in on it, right? And that's why more fund managers are more inept to gravitate to Ethereum than that even the Bitcoin. Facts, right? Not making that up. Trust me on that. Right, so those Ethereum-based protocol tokens out there are always going to have the backing of the granddaddy, and so they're going to run because they deal in that, and that's what it goes back. We was talking about earlier with the NFTs. That's what Ethereum is really excited about, because that smart contract validates that NFT non-fungible token world by all intents and purposes. Right, so we're gonna talk on it. So I know I'd be all night if I don't. So let me get out of here so I can go get me some dinner, right? And so I can recoup and get my brain cells together. It's been a long day for me as well. I hope this was edifying to everybody who tuned in, all my panel constituents here, the people in the training tonight. Thank you. I'm honored. I'm humbled. Hope you guys benefited from it. And it's going to be on YouTube if you want to go back and replay it and, take some notes here and there. You have access to it. Just go to my YouTube channel, plug in tonight's training topic, right? So Evergrande, CPI, Fed, indecision, right? And peaked indicators, right? Market synopsis, right? And so I hope we tied that knot tonight. Right. So that's it. So until then, if you got any kind of other individual questions, hit me up. Y'all know I'm on Facebook when I'm able to be on there. Right. Right. Just drop me a Dropbox or conversational message, or hit me off the side, on the other end, because you guys got my number too. So it's all love. All right, so I'm out, guys. So that without
thanks, Oba. Peace, power, profit, family.
Peace, power, profit, over Jeremy. Everybody in the building. The last parting words, everybody. Everybody good. Everybody good.
Always over. Thank you.
Humble. Already. No worries. All right. Thank you, everybody on the YouTube side as well for participating. Like I said, these are the nights when I do my training. So kind of, cater to the family on this side. And, but, we have it open for you guys to kind of follow along too on the backside. Right. So we appreciate you guys, man. All right. So that's it. So appreciate Brother Snotball in the building, Brother Ramsey, Brother Jim Denson. Sister Angie was on that side tonight. I don't know why she didn't come in the room. She might have been busy. Right. Sister Sharon, our brother, Family Infinite Minds, and Sister Tamika. Thank y'all for tuning in as well. Right. And everybody else might have came through. Appreciate you. All right. See you until next one, guys. Peace, power, profit. Shem Hotel. Stay safe, and we'll see you in the markets. Good night, everybody. Good night.
He's over.